Yes, people, a very, very happy month to all of you. So, guys, here we begin with the accountancy subject, which is a part of your CA Foundation course. So, a lot of people are anticipating, sir, like the other day, multiple retakes, Varuma, people are like, sir, will you tell properly or will you know, do multiple retakes like the other day? No. When it comes to the subject, no. Namala king. So, no retakes here. So, guys, let's begin with the accountancy subject. I don't know, somehow a lot of people have a lot of, negative perception about this subject. A lot of people have a very much, negative thought process or a fear towards this subject. Primarily because when they've studied the accountancy, probably in 11th and 12th or in college, they might not have studied this conceptually, right? People have by hearted the formats, formulas. So thereby, you don't understand the essence of, each and everything that we do in accounts, right? Let me tell you one thing very clearly, people. Accountancy of all the subject, if you compare, it is so conceptual, easily understandable subject. So you understand the concept, let the questions, let the transaction be howsoever complicated. The understanding is well. If you have practiced sufficiently, I'm telling you, you can easily crack the sums in no time. And as a mentor, as a teacher, as your elder brother, it is my promise to all of you that I'll make your life, as long as the accountancy subject is concerned, I'll make your life so easy, so smooth. Whatever you're learning, each and every question, sir, why this, why this, why this, each and every why question will be answered. So all the questions that you have in your mind, which you could not get a solution back then in your school or college, I promise that each and every question will get resolved. Not just that, there are more to it. The more questions that you would not ask, but I'll ask you. And for that also, you'll be getting the answers. So on that positive note, let's commence the session, people. So today, what are we going to look at? So we're going to understand the basics of accounting. So I'm going to touch chapter 1, unit 1, little bit here and there. And I'll go to directly chapter 2. Because I said that theory is primarily of 3 types. One is that theory. Only if you do theory, you'll be able to do the practical questions. Then comes those theory, which you have to do simultaneously along with your practical questions. Then there comes the rest of the theory, which makes sense, which you'll understand properly, thoroughly, with full emotion and feeling at the end of all the practical questions. So I'm taking only that much theory, which is essential for me to commence this subject. So here is the first 3 questions to all of you. The first question goes is, what is accounting? I want an answer in a very simple layman language. What is accounting? Technically, we have a very huge meaning for accounting, but I'm asking from a simple perspective, from a layman perspective. What is the meaning of accounting? If you focus on the word accounting, this word has got something to say. What is it? Accounting means to count. Wonderful, sir. Accounting means to count. Sir, what are we trying to count here, sir? Everything and anything in accounting is all about counting, no boss. Anything and everything that we are doing in accounts is all about counting. Sir, example, sir. Let me take an example for you. A businessman, while doing the business of buying and selling the goods, the first thing that he does is buying the goods. So what is the buying of the goods is called here in accounts as? Purchases. Wonderful. So he purchased 10,000 worth of goods. He sold this for 25,000 rupees. Everything is happening in cash. Means what? Buying the goods by paying cash. Selling the goods by receiving cash. Further, he purchased another 20,000 worth of goods, which he sold for 35,000 rupees. Sir, what are we trying to count here? Everything here is about counting only, no? 10,000 plus 20,000 is equal to how much? 30,000. So what do I do now? Counting. 10,000 plus 20,000 is what? 30,000 is counting. I'm counting the total purchases. 25,000 plus 35,000 put together is how much? 60,000. What am I doing here? Counting. What am I counting? Total sales, sir. How much is cash received? 60,000 is cash received. How much is cash paid? 30,000 cash paid. Balance 30,000 in hand. What am I counting? How much money is there in my hand? Cash in hand. Accounts is all about counting. So what does accounting mean from the layman perspective? Sir, accounting means to count. Very simple. Sir, is it that simple? No. As we progress, things will get more complicated. But from a simple perspective, what does accounting means? Everything is numbers and everything we have to count. That is accounting. Any difficulty in understanding this? Any difficulty? No answer. Now, second question. Why is accounting done? Sir, accounting we understood. Why accounting? If I ask you, what will be your answer? Wonderful. Performance. Wonderful. Same answer. Sir, as a businessman, I will be doing a lot of transactions in the business. What is the meaning of transaction? I meant to discuss. What is the meaning of transaction? I meant to discuss. I'm telling that as a businessman, in business, I do a lot of transaction. I buy goods. I sell goods. At the end of a particular period, I'm interested to know what is the position of my business. Am I profitable or am I into loss? So if you want to know the profit and loss of the business, for that you have to do accounting. So for simple example, if I have to tell you, you have sold goods worth 60,000 rupees. You have purchased goods worth 30,000 rupees. Whatever goods you purchase, everything you sold. And everything is dealt with in cash. So please tell me, this 30,000, if I call this as profit, will I be wrong? No, this is profit only. I purchased for 30,000 rupees, sold for 60,000 rupees. So how much is the balance profit in hand? 30,000 rupees. So why do I need accounting? There is multiple reason. Why accounting needs to be done? For that, there is multiple reason. In that, one primary reason is what? To calculate the profitability of the business. As we progress, you'll understand the other needs and the requirement for accounting. I'm just telling from the layman point of view, in simple point of view, because you're now studying LKG, correct? LKG of accounts only. A for accounts, correct? B for balance, ledger balance. C for credit, D for debit. So we are starting from initial stage. So I'm going from scratch. So from layman point of view, people, why is accounting done? So accounting is done to evaluate the performance of the business. How do you measure the performance of the business? By its profit and loss. If a company is doing excellently well, how do you say it's doing excellently well? By looking at their profit. There's one company whose turnover, no, not turnover, profit, 3 crore. There's one more company whose turnover is 5 crore. According to you, which company's performance is best? B, because his net profit, not turnover, net profit is 5 crore. Net profit for A is 3 crore. There's a turnover by any chance? I told turnover. Sorry, no, not turnover. It is both profits. A is having profit 3 crores. B is having profits 5 crores. So looking at the profitability, which company is more lucrative for investment? B. So how did you conclude that B is a good company? Looking at the performance. How did you measure the performance? By its profit. By looking at its profit, you measured its performance. Any problem in this? Why accounting is done from a layman point of view, explain. Technically, there's a lot more to it, but I'm explaining only from layman point of view. In a simple perspective, why accounting is done to evaluate the performance of the business. So what is accounting? Sir, in simple language, accounting means to count. What is a need for accounting? Why is accounting done? To ascertain the financial performance. A company's performance is known by its profit and loss. To ascertain means what? To know, to calculate the financial performance, that is profit and loss of the business. How do you get to know the profit and loss of the business? By preparing trading and P&L account. So if you are a sole proprietorship concern, you prepare a trading and P&L account. For a partnership concern, you prepare trading, P&L appropriation account. If you're a company, you prepare statement of P&L. But all these are same only. Names are different. Presentation might be different. Emotion is same. All the three documents at the end of the day gives me what? Profit and loss of the business. Second, to ascertain the financial position of the balance sheet. So what is the meaning of financial position? I'm meant to discuss. When the right time comes, I'll discuss. So these two are the primary reasons to ascertain the financial performance, and second is to ascertain the financial position. What is the meaning of ascertaining financial position? I have not yet discussed now. When the right time comes, I'll discuss. I focused only on the first point, is to calculate the performance of the business. Easy. Now, the third question is, sir, why is accounting rules? Accounting to be done is okay. Why have they put so much rules into it? Why are they not giving the free hand to prepare the accounts the way we feel like preparing? Why do we have accounting rules and regulations? Please tell me. Wonderful. Super. Next. One answer is people said uniformity, sir. Okay. Comparable. Wonderful. Yes. Super. You guys are pro, huh? Next. Two answers I got. Comparability and uniformity. Yes. Simplified. Okay. Nay, accounting rules is for simplification. The question is, why is accounting rules into picture? Sir, if you don't have the accounting rules into picture, for a given company, or for a given question, people will come out with different answer. For a given situation, one situation, people will come out with multiple answers. Now the challenge what I have is, who is right and who is wrong? I'll give an example. Let's say we are in the business of buying and selling laptop. We are in the business of buying and selling laptop. So now let's suppose I purchased 10 laptops at the rate of rupees 20,000 each. Okay. Now, out of this, 8 laptops are sold. Purchased 10 laptops at rupees 20,000 each. Sold 8 laptops at the rate of rupees 45,000 each. Now, expenditure incurred for doing the business, the expenditure incurred. Am I teaching accounts now? No. I'm only teaching the basics. Accounting, I've not yet started teaching it. I have to teach accounts yet. I'm just giving one outline atmosphere about what is accounting all about. Expense incurred is rupees 10,000. In that, 8,000 is paid. 2,000 is yet to be paid. Are you able to understand this question? Since all of you are coming from commerce background, I'm taking this example. 2 years accounts you studied. So you know what I'm doing? Anybody here from science background? Anybody here offline, online from science background? Nobody. So everybody is familiar with accounting? Okay, wonderful. Now guys, this is a situation. I'm giving you 2 minutes of time. You have to tell me what is the profit and loss of this business. Fast. Fatafat. Question is clear. Purchased 10 laptops at 20 each. Sold 8 laptops at rupees 45,000 each. Expense incurred is rupees 10,000. 8 is paid. 2,000 is not paid. Please calculate the profit and loss of the business. Please calculate the profit and loss of the business. Calculated. Wonderful. Others. How many of you know that in your CA Foundation examination, you're allowed to use your calculators? All of you know it? Wonderful. So at the end of the session today, I'll tell you which calculator to buy. I want everyone to come with your calculator from next class. What is the profit and loss of the business? 1,52,000. So one answer I got. 1,52,000. Okay. 1,50,000. One more answer. Okay. Let me put ABC. Let's play कौन बनेगा करोड़पति. Ninglo melala morokodi. Come on. I'm coming. 1 second. B.
Sir, 1,92,000.
1,92,000. Round,
Yes, sir.
1,90,000 is one option. 1,92,000 one option. See, somebody said 152. Who's that 152? Okay. Is there anything called as 150? Anybody gave 150? You gave 150. 150. Okay. You said 190, 1,90,000. Who said 192 online, right?
Yes, sir.
Okay. E option. Anybody saying in one more option apart from this? Any other option, please? 4 options only. Somebody say some more answer. So come on, give no. No problem. Come. Oh, 4 option. Okay. She's like, sir, in KBC only 4 options there. No, I thought somebody saying 5th option also. I think we'll slightly tweak the game. We'll play with 5 options. What is it? Okay. Now, no, in our game, no call a friend. No audience poll. Everything is me only. Answer is going to come from here. Yes. Everything. My question is, one more answer. Wonderful. E answer. 2,80,000. Wonderful. I'll wait for 1 more minute. Anybody else coming out with any more answer? Imagine all of you are accountant. I am a businessman, poor fellow. I came with a lot of expectation to you. Then I'll give you the accounting data. You will tell me what is the profit and loss of my business. I went to one accountant. One person says, "Sir, you did excellent business, sir. 1,52,000 is your profit." I was very happy. From there, I was coming all the way back home. I saw one more accountant ka board. So I went to that fellow, gave the same data. I told him, sir, I did business. Please tell me what is the profit and loss of my business. Sir, wait, sir, I'll calculate. I'm the best accountant. Don't go anywhere else. He has given what answer? Sir, 1,50,000 rupees. Now, the man is under tremendous shock. He's like donkey fellow. One question, two different answer. Two accountants giving two different answer. Now, the trust on the first accountant is shaken. And the trust on the second accountant also shaken. Oh my God. Now you want to go with the third person to do a tie break. So now he's going to a third accountant. He says, sir, you did super duper business. Your profit is 1,92,000. The person should be happy, because I made 1,92,000 profit. But I'm crying there because third accountant gave me third answer. Now, I'm going to fourth accountant. That gentleman says, sir, 1,90,000 is your profit. What all the other three people said, no, they don't know accounts because they did not study from Pratik, sir. 190, right? I don't know. Fifth accountant says, sir, what, sir? Your business is super duper hit. 2,80,000 profit you made. Oh my God. One said, I'm happy I made profit 280. One said, I'm crying that I don't know what is the right profit. Now tell me, people, one question only I gave you. You gave me back 5 different answers. As a owner, what will be my plight? As a bank manager who's going to give you loan for your business, what will be his plight? As a government who's going to collect tax on your profit, government is crying, which profit should I take? Government here is very clear. Among all these 5, which is higher profit, I will take that. For one question, for one scenario, if you come out with different answer, what will be the plight of this person who's paying fees to the accountant? I paid the fees 5 times to get what? 5 different answers. Oh my God. Now do you understand why rules and regulations are important? Rules is important because if everybody had studied the rules properly, for a given question, they'll come out with same answer. Whether I go with accountant 1, 2, 3, 4, 5, everybody will study accounts properly from base. No? Common accounting they study. So for a given question, the answer should also be common. So this situation is a proof that, yes, we need to have accounting rules and regulations in place. If we don't have the accounting rules and regulations in place, we will not get the common answer from everyone. Everybody will try to prepare the accounts in their own way. They'll try to prepare their own answers and they'll try to justify that, no, my answer only is right. At the end, the entire accounting is going to be a chaotic process. So it is very important that we have accounting rules and regulations in picture. So what is the need for accounting? Why do we need it? Sir, we need accounting rules and regulations because the data which is presented by the accountant should be understandable. One accountant will present in one manner, another accountant in another manner. If each one of them is coming in different way, then I don't know which way to adopt and understand. So the accounting rules is important so that you prepare the accounting data in accordance with some rules so that the data which is presented to you, it is understandable to you. It is understandable to you. The first motto of why the accounting rules is required is to ensure the understandability. Second, what is the need for accounting rules? Sir, it should ensure transparency. Transparency means what? The data what is presented in the account should be transparent. There should be not any hidden game. Inside that, there should not be any hidden information. All the data should be transparently known to me. Why? You will understand in some time. Second, sir, the data should be reliable. Whatever the data the accountant is presenting to me, that data I should be able to rely on it. Because on the basis of the profitability of the business and other factors, you decide to invest in any company. Do you agree with me? When I asked you a question that there's a company A and there's a company B whose net profit is 3 crore and 5 crore, you said that, sir, B company is good and you want to invest in that company. As a bank manager, this company is doing good. You want to provide loan to this company. So on what beta? Sorry, not beta. Beta nahi, data. Oh, you sorry, ma, not beta, data. On what data? On the basis of what data did you decide this company B is good? So on the basis of the profit. How does the profit comes? On the basis of the accounting data. If that data is not reliable, then this profit what is given is not reliable. If this profit is not reliable, then on that only you're giving loan, no boss. Which means then the loan what you're giving is also not reliable. So it is very important the data that you present to the people should be reliable. And the reliability is assured if the accounting rules and regulations are in place. Next, it should be ensuring comparability. The data what I present in the current year, the basis on which the data is prepared, I should be able to compare that with the data of the previous year. My previous year turnover, 5 crore. My current year turnover, 7 crore. So I can compare, no? If I compare, I see that my current year turnover is much better. Previous year turnover 5 crore, current year turnover 7 crore. 2 crore extra turnover I did in the current year, which means what? The business is progressing. Imagine in 1 year, I'm preparing the accounts on cash basis. In 1 year, I'm preparing the accounts on accrual basis. Will the data be comparable? Can I compare a cash basis accounting and accrual basis accounting? No, because both are different bases of preparing the accounts. So the data what you take into consideration by applying the rules, that rules is the basis of accounting data that you present, that should be facilitating a comparison. In other words, the accounting that you do on the basis of rules and regulations, that should facilitate the comparability. Comparison not with the data of just previous year and current year. My data should be compared with that data of my competitors. I compare my data with my own data, current year versus previous year. Apart from that, I do comparison of my data with the competitors' data. So the accounts what my competitor is prepared, the basis of that, and my basis, if both are same, then I can ensure there is a comparability. He is preparing accounting as per his wish. I am preparing accounting as per my wish. Can I compare the data? Can I compare the turnover? No. You can compare two things only when they are at same level. You can compare two things when they are same level. Can I compare you with the person who is studying in 10th standard? 10th standard, the person got 95% marks in the board exam. In the CA foundation exam, you got 60%. If your parents come in, comment, look at that fellow. 95% he got. Look at you, donkey fellow. Only 60% he got. What are you studying? What is that fellow studying? Where is 10th standard? Where is CA foundation? Can you even compare the level? So compares happen with the same level people. A 10th standard boy can be compared with a 10th standard boy. Agree? A CA foundation student performance should be compared with the performance of another CA foundation student. Can you compare with some other level? No. So for you to compare two things, the level, the base should be same. So accounting rules is going to give you that base where you prepare the accounts in such a way which will facilitate the comparison. Next is what? Consistency. The rule will ensure that the accounting data what you're preparing is consistently prepared on the consistent rules. All of you know in depreciation, you have two methods for calculating depreciation. One is straight line method. Second is WDV method. 1 year you're preparing depreciation on SLM method. Another year WDV method. Then again SLM. Then again WDV. Whatever my mood comes, that time I'll put SLM. Whenever my mood comes, I'll put WDV. Which means your basis of accounting is changing. Depreciation value every year will change. That is it consistent? Can I be inconsistent and following the rules and regulations? No. Law allows you to choose the rules. There are multiple rules given. In that you're free to choose whatever you want. But whatever you have chosen it, ensure that you consistently follow. So accounting rules and regulations ensure that the accounting data what you've prepared is understandable to people. The accounting data what you've prepared is having transparent information in it. The accounting data what you've prepared should be reliable. The accounting data what you've prepared should be comparable. The accounting data what you've prepared should be consistently prepared in the same manner so that all of this is achievable. Now are you able to understand why is the accounting rules necessary for us to study? If this rule is not there, you will not be sitting here. I will not be sitting here and we will not have such a big book also. Tell me people, accounting is an important subject or not? Very important subject. Guys, in a business, accounting plays a very integral aspect of any business. In other words, accounting plays a very crucial or integral aspect of any business. Bigger the business, bigger will be the complication in accounting such transactions. A CA is one such expert. A CA is one such expert who knows how to handle accounting, let that accounting be howsoever complicated. Even the complicated of complicated accounts you give. Since we are studying the things from base with proper understanding, we'll be able to tackle those complications in any manner we want. Just to quote one example, when was the GST introduced? 2017. Sir, 1 July 2017. A normal person will say, sir, 2017 GST came. CA will never say that. CA knows the date when exactly came. 1 July 2017. Because suffering started from there only. So the person who's gone the sufferance will know that. So GST is there in a syllabus? Very much. Foundation is there, small glimpse of it. Majorly it is there in C intermediate. When GST came, the department gave all the rules and regulations of how the GST needs to be filed, etc., rules and regulations they gave. But how the accounting for the GST needs to be done, nobody said. In the entire implementation of the GST, I'm telling you, the chartered accountants, across the country had played a tremendous role in helping the client to understand how the accounting needs to be done for different complicated scenarios under GST. Had the CAs not been there at the time of implementing GST, the GST wouldn't have been implemented that good as it is now. Because there's a huge gap between the government and the clients. Client is doing the work at the ground level. The department is sitting somewhere in their office where they have drafted the rules. Now, who will connect these both people? Because they are talking in the law language. Common people don't understand law. So how to bridge the gap? CAs were those people those days who act as a bridge between the government who gave the GST rules and the common people who wanted to implement the GST for their business. Nobody taught us that point of time that this is how we have to do. Based on the experience what we had, based on the knowledge what we had, we agreed that this is how the accounting needs to be done. Are you able to follow?
Yes, sir.
Chartered accountancy course is a #1 course in the entire country. The amount of reliance what people have on us for accounting, for GST, for income tax, these three things are the crucial things that we take care of. The amount of trust what people have on us with regard to these three aspects, that much trust people don't have on anybody else. So that kind of a powerful course you're studying. So imagine that your enthusiasm towards studying the subject, the passion towards learning that subject, how much it should be. That good this subject is. I'm telling you, nothing to be bad. Everything makes sense. Everything is going to make sense. Each and every formula, each and every format that you're going to learn, there's a reason behind it. There'll be logical explanation behind it. Though we will learn formula, though we will learn format, why? Because it is essential to present that in the exam for scoring purpose. But just presentation is not our goal. The goal is to understand why that presentation, why that formula, and how things will change in the different scenarios. The logical reasoning behind that is very, very essential. Sir, all that is okay, sir. Out of this, which is right, sir? My mind is stuck there only, sir. We are not able to go forward. Wonderful. How many laptops did you sell, people?
8.
Sold 8 laptops at 45,000 each. So please tell me, what is the turnover of this company? 3,60,000. Wonderful. Minus two things, two expenditure we have done. One is purchase, second is other expenses. Purchase. Most of the people have taken 10 laptops as purchases. If you take 10 laptops and multiply, you'll be violating a principle called as matching principle. Matching principle. Sir, what is matching principle? When the right time comes, I'll discuss. 8 into, how much is the purchase cost? 20,000. Wonderful. How much it is? 1,60,000, sir. Wonderful. Minus expenses. Some people are confused. Should I take 10,000? Some people confused. Should I take 8,000? Some people confused. Should I take 2,000? The right is 10,000 fully, because the expenditure is completely incurred. We are preparing the accounts on the accrual basis. Accrual basis I'm meant to discuss in future. I'll chumma give you an intro. Accrual concept says that record the income the moment it is earned. Receiving the money is not the criteria for recording income. Only if I receive money, I will record income. That is cash basis of accounting. When you're preparing the accounts on cash basis, means record income when paisa received. Record expense when paisa paid. But accruals is not like that. Receiving money or paying money is not the criteria for recording my income and expense. So what is the criteria? Sir, income earned is the criteria. Expense incurred is the criteria. What is the meaning of income earned? What is the meaning of expense incurred? I'm meant to discuss. Am I loud and clear? So now this 10,000 rupees is fully expense incurred. And on that basis, I record full 10,000 rupees as my expenditure. So minus 10,000. Please tell me what is the final answer?
1,90,000.
1,90,000 is the right answer. This place only I said no. Correctly, this place only I said no. Okay. Wonderful. So who got 190? Raise your hands. Wonderful. Others? Wonderful. Riya also got it. Don't feel for it. We are into learning process. If you know all the answers, then why will you be sitting here? We are in the learning process. We should make mistake. Make all the type of mistake what you want to make. Up to or 10 days before your final exams. But on the exam date, யாருங்கிறது நம்ம உலகத்துக்கு காட்ட போறோம். Who are we? We are going to register to people. Am I loud and clear? Yes, it is my promise today. Whatever data is there here, whatever information is there here, whatever emotion is there here, everything I'm going to share. What will I keep, or what will I do by keeping the data with me? If I just keep everything to myself, when I go from this world, everything will go along with me. Always, whatever we have now, we have to impart, share. Every single accounting knowledge, whatever I have, it is my promise that I'll put it into your head. So that tomorrow when you go to the real world, you can use that knowledge to best of your ability and benefit out of it. So every single thing that I've said here, I'm going to discuss in detail. I've not even started teaching accounts. I'm just asking the question to make you understand why is accounting important. I've not started teaching accounts at all. Teach panna pora. I've just told you why it is important to do the accounting rules and regulations. For people who are very curious, just I'll tell you. There's one principle called as matching principle. Though I'll discuss this in future, but I'll just give an intro. Matching principle says that record your expenses to the extent if that is contributed to the income. Record only that much part of the expenses which is contributing to your income of that year. I purchased how many laptops? 10 laptops. Out of 10 laptops, how many laptops helped you in contributing to your revenue and profits? Only 8 laptops. Therefore, matching principle says that you should record only expenditure for 8 laptops. Now, the question that is there in your mind is, sir, for the remaining 2 laptops, will you not account? We will account it. How the accounting treatment is, how the impact of that will be on the financial statement, we're yet to study and assess. That is what we're going to do in the rest of the accounting classes. Are you able to understand? I'm just trying to put one seed into your mind. The accounting, why? If you ask why, everything has got a bloody answer to it. Everything is answerable. You ask a why question, there's an answer to it. And I'm telling you, when all your why questions are answered, no, the amount of satisfaction what you have at heart, I can't explain. That good it is. Of all the subjects that you're going to study, I'm telling you, this is the most favorite subject of mine, like that you will tell me. That is the beauty of accountancy subject. So now, what is matching principle? All that in depth will be discussed in upcoming classes and sessions. Now, let's go back. We have all the questions based on this. Entire final course, what are you going to do, boss? This only, no? Entire foundation, what are you going to do? This only, no? So explanation will be done when the right time comes. Let's go back to the PDF. We were discussing why accounting. Sorry, what is accounting? What is the need for accounting? What is the need for accounting rules? In this, are you all clear?
Yes, sir.
Okay. Now, my question goes to all of you. So again, question. My job is only to ask question, no? You will answer. Right, wrong. Better answer of that I will give. That is what is teaching all about. Now, my question goes to all of you. You are doing all these accounts, no? For whom are you doing all these accounts for? He's telling user. External users, sir. So internal users, sir. Okay, right, sir. Okay, then. Creditors, Government, right.
Employees.
A lot of people say that, sir, we do accounting for the owners. As an accountant, I work for the owner. Wrong. What you said is right. There are 7 category of people for whom we are preparing the accounts, for whom we are taking so much efforts. Let's have a look at who are those people. Users of the financial statement. We prepare the financial statement. We prepare the accounts for the following category of user. The users have been bifurcated into two categories. One is internal user category. Second is external user category. Internal user means what? The owner or the existing investor. This concept of investor is prominent in companies. In case of sole proprietorship business, partnership business, we have only one term called as owner. This equity shareholder and preference shareholder is something which will be used in the company accounting. In the company accounting, we'll come across the term called as equity shareholders, preference shareholders. In short, who are all these people? One single word, owners. So for owners, why is accounting important? For owners, why the financial statement is important? Because only by that, he will get to know the profit and loss of the business. This is one of his requirement. Like that, he'll have many multiple requirement. I'm just giving you one example. As an owner, what am I interested into? Profit and loss. Apart from this, I need more information about my business, about the performance of my business. That will again come from accounting only. All that we'll be studying in upcoming sessions. As an owner, I need multiple things. Of all the important things, which is the highest important thing? To know the profit and loss of the business. So if I want to know the profit and loss of my business, for me, accounting is essential, mandatory. Without accounting, I will not get to know the profit and loss of my business. So owner ka need is this. This is the need of the owner for accounting. Second are the external people. External users are those people who are not the owners, but connected to the company or the business externally. Internal person means what? The person who is running the business is called as internal person. Directly the owner. Who are the external users? Those people who are connected to the business from external place. Are you able to follow? External users who are not the owners, other than owners, are called as external users. Because all these people are also connected to the business. So if the business results is not known to them, they will not know whether should I continue the relation with that company or not. Should I continue my relation with that business or not? I will not know. So as an employee, you might be wondering, why is the employee interested to know the profit and loss of the business? Why is he interested in my financial statement? Arey boss, an employee, employee, there are two types. One is an employee who works on salary basis. One is another employee who works on salary basis plus percentage of commission basis. We studied in 11th standard. Managers commission 10% on profit. Profit after all commission, profit before commission, all that you remember, no? So employee will get income from the company. Employees related to the company in what way? To get the salary, to get the commission. So he is interested to know whether the company is doing proper or not. Because if the company is not doing great, means in future the company might shut down. Then why should I work in a company which is not doing great? So as an employee, I'm interested to know the company where I'm going to work, is that company doing well or not? Because if the company is doing well, they'll give me increment in better way. If company is not growing, if company is begging, borrowing, then what happens? They'll also not give me increment on time. Then even I have to beg and borrow to my owner. Sir, increment, sir. 2 years I work, now give me increment, now give me increment. So if you're going with a company who's got excellent growth rate, your growth also is going to be in the same proportion. So employees interested in the financial statement of company. Why? Because to track the growth of the company, impacting the earning. So the earning of the employees depending on the growth of the company. A growth of the company is measured by the evaluation of the financial statement. By evaluating the financial statement, you get to know whether the company is growing or not growing. Second, all of you know this term called as PF, Provident Fund. What is Provident Fund? If you go to any company, if you work, let's suppose the company gives you 25,000 rupees, 50,000 rupees salary, let's suppose. 50,000 rupees salary they give. Now, there's a rule that has been implemented by the government that don't hand over the entire 50,000 to employee. Because if you hand over that money, he will spend all that money. Because very few people have the habit of savings. A lot of people have the mindset that whatever money we earn, we should lavishly enjoy. That is the Western culture. Do you agree with me? Indian culture. It is our Indian culture where we encourage savings. In abroad, whatever money they get, no, everything they spend. So even in the olden days, people used to do like that only. Whatever money they used to get, no, they used to spend it. Not in the lavish things, in the daily emergency, daily day-to-day needs, whatever they need, on that they used to spend. At the end of 5 years, 10 years, there is no savings left for those people. And after 10, 15 years, why do you need savings? If you want to buy a house, if you want to, perform the marriage of your daughter or son, you need money, boss. If there's any medical emergency, you need money. So where will the savings come from? If you're not saving the money, where will the money come from? And these people were not that educated to save the money. So government said that nothing doing, we have to force them to save money. How? So government said that out of this 50,000 rupees, for example, I'm telling, give 45,000 to that employee. Let him spend whatever he wants to spend. Remaining 5,000, don't give it to him. Give it to me. Who's saying this? Government is saying. So I will give this 45,000 in the hands of employee and this 5,000 to government. Now you will tell, sir, this is cheating, sir. This person has worked hard throughout the month and now the 5,000 government is taking and going. Arey Baba, when government is taking this money on behalf of you. So in the government, there is an account that is opened in your name called as PF account, Provident Fund account. So in this, all your money is getting accumulated. Every month, the money is getting accumulated. So after 10 years, 15 years, whenever you want the money, lump sum money, you can get this money back from government. You cannot withdraw this money immediately within 1, 2, 3, 4, 5 years. There's a lock-in period. After that period, only you can withdraw the money. So imagine 5 years. Every month, 5,000 if you put, how much money? 5,000 per month. For 1 year, 60,000. For 10 years, 6 lakh. Isn't it a huge money? So that is called as PF. So PF is compulsory to be given by the employer to the government on behalf of employee. So now, as an employee, I'm concerned whether the company has given this money to government or not. Because if the company gives the money to government only, I can get the money back from government. 10 years later, if you go and ask government, give me 10 lakh rupees or 6 lakh rupees, will government give you? Had government received, then they'll give you. Otherwise, not. So it is very important for me to see whether this person has given this 5,000 to government or not. Sir, how will this data be shown in the account, sir? In the financial statement, sir? Donkey fellow. We have in the balance sheet something called as liabilities. Under the liability side, PF amount outstanding 50,000 will be shown. So the moment I see this as an employee, my blood should boil. Why? Because I should say company, cheating fellow, you took this money from me. Telling that you will deposit this in the government account. That is in the government account under my name. You have not deposited this money. Cheating fellow, deposit. So how did you pressurize the company to deposit this money? By seeing at the balance sheet, by looking at the liability side, you got to know PF outstanding is 50,000 rupees, which means in last 10 months, my money of 5,000, the company has not been depositing, which means company has been using your money. Is it right? No. So this data came from where? This data came from accounts. This is how an employee is interested in your accounts, in your financial statement. Now tell me, justified or not justified? 100% justified. Wonderful. To know the status of the statutory due. Statutory due means what? The PF is called as statutory due. Means what? A due, an amount which compulsory by law the company has to pay. Statutory means what? By law. An amount that the company has to pay by the compulsion of law is called as statutory due. So tax is one statutory due, PF is one statutory due, gratuity is one statutory due. All this we'll be learning in the upcoming sessions. So to know the status of statutory due related to employees, whether the PF, what the company deducted, that 5,000, did they deposit that money in the government account or not? I'll get to know that by accounting information. Wonderful. Sir, who is the next person who is interested in my accounts? Who is interested to see my financial statement? So the next persons are a group of people called as lenders. What are they lending? Sir, they're lending blood to my business. Sir. Take 2 units of blood, 3 units of blood. Are they lending blood? Sir, yes, they're lending blood. The important blood of the business is what? Money, paisa. So these are people who are lending money to the business. Who are they? Bankers. Non-banking financial institutions, third-party loan providers, all these are lenders. They are interested in my accounts. Why are they interested in my accounts? Looking at the accounts, they'll get to know whether this company is doing good or not, whether this enterprise is doing good or not. And accordingly, they can decide whether to provide loan to that person or not. The company is into continuous loss for 5 years. Is it a wise decision to give 5 crore rupees to this loan as a loan to this person? Already 5 years. A business in the first year, second year, if it is into loss, understandable. Because in the initial stage, sales will be less. expense will be more. So it is very natural that in the first 2 years you're in loss. But if you're continuously in loss for 5 years or 6 years or 7 years, which means there's something fundamentally wrong with your business model, or the owner is not properly running the business. So when a person is continuous loss, again will you go and lend that money to that person? No. So how as a lender I will know whether should I lend the money to that person or not? As a lender, how will I know should I give the money to that person or not? By looking at the accounting data, by looking at the financial statement. So by looking at that, I'll get to know should I give him loan or not. By looking at that, I'll get to know if at all I'm giving loan, how much loan should I give? He's asking 10 crore. If I give 10 crore, whether that person has got the capacity to repay back 10 crores or not, that also have to assess, no boss. He will ask 10 crores, but his business has got a repayment capacity of only 1 crore. So I will be able to give him 1 crore. So to decide how much loan to provide to that fellow. Third, whether the business has got the repayment capacity or not. Whether the business is generating sufficient cash flows enough to pay the principal and interest on time. That assessment also you'll get from where? Accounting records. So an accounting record can give you that much information. That is when you go to any banker asking for a bank loan, he will ask you n number of documents. He'll ask you so many accounting records. He will sit and do all analysis of the accounting records and check you and your business from all perspective to understand whether you have the capacity to repay the loan taken or not. So once he is satisfied, only then he'll provide the loan, or else not. That is how a lender is interested in the accounts of my business. What are we discussing? We are discussing that the accounts that we are preparing, no. For whom are we preparing? We are not preparing the accounts only for our owner. We're also preparing the accounts for all these remaining people also, because these people are also in some way or the other related or connected to my business. So to ensure that the continuity is there with those people, it is essential that we have to provide the accounting records to them. Failing which, they will not be able to understand the position of the business and they'll not be able to deal with our company. Next, the third person who is interested in your accounting records, in your financial statement, is the creditor. Who is a creditor? Who is a creditor? He is a person who supplies the goods to the company, to the business, to the enterprise on credit. Means he says that, sir, please take this phone, you sell it. Whenever you get the money back after 1 month or 2 months, that time you give me the money back. So this is called as credit purchase. So we are doing credit purchase and the creditor is doing credit sale. He is interested in our accounting records. Why? Because looking at the data of the company, looking at the financial performance of the business, looking at the financial position of the business, he can decide whether he should supply the goods or services to that company or not. Imagine in the balance sheet, there's one particular creditor whose money which is outstanding is 10 crore rupees. Once you come to CA Intermediate, I'll be teaching the very first chapter that I call as Schedule 3. That is, an accounting is prepared as per Schedule 3. In the Schedule 3, you're supposed to give a information that this 10 crore rupees, what is outstanding, no, this is due for how many months? Means the due date is touched. On the due date, I'm supposed to make the payment. And for how many months, even after the due date, I'm not made the payment. Like that, you have to give a report. That is called as aging report. Aging report means, see, creditor in the balance sheet will be of two types. One, 7 crore creditor, the due date of the payment is not come. The due date of the payment is not come. No problem with this. When the due date comes, I'll pay. I'm telling that apart from the 7 crore, there are 3 crore worth of debtor whose due date is already gone. I have not made the payment on time. Now, when you give this information in the financial statement, I will be alert. Oh my God, this company is supposed to pay 10 crore, out of which 7 crore is not yet due. Means when it is due, that time the company will pay. But what am I seeing? I am seeing 3 crore worth of creditor whose due date is already gone. And the company is not paid for almost 75 days. Now you will think in that position. Then if I supply the goods for 1 crore, chances are there that he might not pay me that 1 crore on time, on the agreed due date. So I'll become alert. So your financial statement is giving that kind of information based on which you can decide whether should I give the goods on credit to that company or not. If I talk about particularly this company, will you give the goods on credit to this fellow? No. Why? Because you're scared. 3 crore worth of creditor are crying for money. The due date is already gone and the person has not paid the money. Why did the person not pay the money? Because the person did not have the sufficient cash inflow. If the company is not having sufficient cash inflow, what is the guarantee that he'll make the payment to me on time? Like that, I will start thinking as a creditor. That is why financial statement and accounting records are very essential for me to do the dealing with the company. Any problem here? Second, the creditor is interested to assess the pending dues and the aging of the other creditors. Aging of the other creditors. Which aging? The 3 crore rupees is there. No, this is outstanding beyond how many months of the due dates. That is called as aging report. Aging report is given of those creditors whose due date is already over. And since the due date, for how many days the amount is not yet been paid. That is called as aging report. So we get the aging report in the financial statement. Second, third, to assess the paying ability of the business, whether this person or this company has got sufficient ability to pay the money or not. Do we have the sufficient inflow of the money to pay the outflow of the money or not? That much assessment this creditor will do. So tell me one thing. I'm going to one shop. I am buying some goods for 2,000 rupees. If the person says, you want 2,000 rupees worth of goods on credit? Oh, then, well, please give me a financial statement. Will I go and buy from that fellow? Which means any Tom, Dick and Harry with whom I'm dealing, will I keep on giving my financial statement? No. Here when we talk about the creditor, when we talk about the lender, these are those people who are going to support the business in crores and crores of rupees. When a person from whom I'm buying the goods for 10 crore, 5 crore, 2 crore, 3 crore, that person, if he asks, the financial statement makes sense. Otherwise, for every 2,000, 3,000 chiller party, if I keep on giving financial statement, when will I give the statement? When will he read the statement? When will he give the goods? When will I do my business? Customer, will they wait? No chance. So you have to be very practical here. Next, government authorities. Government authorities are interested in your accounting records. Why? Government gets tax from a business. Tax is calculated upon profits. Profit is derived based on your accounting, based on the accounting rules that you're following. Therefore, the government is interested in your accounting records. So to assess whether the appropriate taxes are calculated and paid or not, whether the calculation done is proper or not, whether the tax is paid properly or not, on time or not, every kind of assessment I get from my accounting records. So government is also interested in our accounting records. Next, public or potential investors. So all of you know that there's a concept called as company, where I can invest money in any company. Reliance Limited, which is owned by Mukesh Ambani. If I want, I can invest in that company. But for me to invest money in that company, I should know, first of all, how the company is doing, no boss. So how will I know that the company is doing well or not? By what report seeing? Financial statement, annual report of the company. When I see that, I get to know that this company is doing good or not good. So to assess as a public, as an investor, as a potential investor means what? I have the money, I'm about to invest. I'm called as a potential investor. As a public, as a potential investor, I'm interested in the accounts of your company to assess whether to invest in the business or not. To invest in your company or not, I need that information. And for that, accounting records are essential. Last but not the least, customer. The customer is also interested that whether they're dealing with the good enterprise or not. There's a company who does not make the payment on time to the creditor. There's a company who's not making the payment to the lenders on time. All kind of default, not handing over the statutory dues to government on time. Every kind of defaults. Will you feel good from buying from that company? You'll say, what company is this? Correct, no? So even as a customer, I'm interested to check whether the enterprise with which I am dealing is a good company or not. So you are preparing accounts for whom? For all these 7 people. For all these 7 people. 1, 2, 3, 4, 5, 6, and 7 people. For all these 7 people, we are preparing the accounts. Any problem in this?
No, sir.
No energy.
No, sir.
Wonderful. Online people, any problem in this?
No, sir. No, sir.
Wonderful.
No, sir.
Now we head towards the very, very important aspect for today, which is the base for all your upcoming classes. From here is what your accounting explanations are going to commence. Very, very important by people, which is called as accounting process. Accounting process. All said, can you start? Sir, now only you're going to start. All this while was what? Intro, just a demo. Now this is a real learning. Now this is where the teaching is going to begin. Are you all ready?
Yes.
No energy. Are you all ready?
Yes, sir.
Online people.
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir.
We are going to understand now what is the accounting process. What are the steps involved in accounting? How do I do accounting for any business? Accounting is a systematic process. What is the meaning of system? System means doing something in very organized manner. System means what? Doing things in very organized manner. Now, please tell me, all of you have completed your schools. Do schools have system? Yes, there is a system. System that morning, 7 o'clock, you have to be inside the gate. 7 o'clock, gate will close. People are again thinking of the old memories. 7 o'clock, gate will close. From there, go to class. From class, you'll walk in and come down to ground for assembly. Then an assembly prayers will happen. Then you'll go back. Then you'll have your own periods. This period, English period, Maths period, Economics period. So and a PT period. Oh, wonderful. People are missing PT period, Yeah. So the entire school is driven through a process and through a system. If we don't have system in place, what will happen? People will do whatever they feel like doing. One person will come 7 o'clock in the morning. One person says, no, I'm not interested like that. I'll come 7 o'clock in the evening. One person will say, no, I don't like accounts teacher. I will not sit in accounts class. I'll go and sit in economics teacher. One person will say, I don't like any teacher. I like only PT master. If system is not there in place, everything, Govinda, oh Govinda. So do you agree that even for accounting, the system should be in place? If the systems are not in place, everything will be screwed. Not just screwed, royally screwed. Agree or not? So now accounting is what? So it is a systematic process. Systematic process of what? Identifying a business financial transaction, BFT and E. The first step of accounting, anybody who's doing accounting, the first step is what? Identifying what? A business financial transaction. Oh my God. And one more thing should come here. Event. Event, not that event. What you are thinking? This is a different event. Kalyanam, one event. Where it's in that you have, what is that? Sangeet ceremony. What is it called as? Dancing ceremony. That event we're not talking about. We're talking about accounting events. First, what is the meaning of transaction? Let's talk about this. What is the meaning of transaction? What is the meaning of transaction? Tell me, fast. Exchange of money. Very good. Okay. Exchange of money is telling exchange of goods. Wonderful. Next. All of you, open your mouth. All of you know how to open your mouth. No, respond fast. You can see this Tata later, man. You tell me the answers. Everybody's looking at Tata. I'll tell you who the Tata is. Tell fast. What is the meaning of transaction? What is the meaning of transaction? Exchange. Exchange தான் சொல்லிட்டு இருக்கீங்க. யார் எங்க எக்ஸ்சேஞ்ச் பண்ண ஒண்ணுமே சொல்ல மாட்டேங்கிறீங்களா? What is the meaning of transaction? This is there in this no, where it is. It's gone up, இதான் வருது. இல்லையே. In the PDF is not there. In Excel it is there. Excel it is that doesn't Now, what is the meaning of transaction? This transaction has got two terms into it. Trans means through. Action means to do. Means to do something through somebody. Transaction. Transaction is nothing but performance of an act. Performance of an act. In simple layman language, transaction means exchange of goods or services or funds between two party. In that one person is business, another person is third party. One more time. Transaction means exchange of goods or service or funds between two party, minimum two party, more than two party also allowed, but minimum two party, in which one party is business, another person is the third party. Sir, what is the meaning of exchange of goods? Exchange of goods means what? I'm going to a mobile shop, I'm buying this mobile phone. So he is handing over the mobile phone to me physically. So that is exchange of goods. Isn't this a transaction? Yes. Yes or no? In return, what am I giving? Money. Wonderful. So this is transaction happening between two people. One is me, another is the shopkeeper. Second, exchange of service. Now, what am I doing here? I'm providing service to you. In return, what did you pay me? Money. So this is what? Transaction. When you paid the money, transaction. Third is what? Exchange of funds. When I go and deposit the cash in bank, so are you giving any service there? No. What is being exchanged there? Goods, service? No. It is funds, money that is getting exchanged. So that's a transaction happening between the company, business, and the bank. So transaction means what? Anything that happens between two or more people. In that, one is the company, another is a third party, which involves exchange of goods, services, and funds. Any problem? Online people, any problem?
No, sir.
No, sir.
One example, Ram purchases chair from Raja for cash. Is this a transaction? Yes. So this is a transaction between whom? Two people, Ram and Raja. So Ram is transacting with Raja, or Raja is transacting with Ram. And what are they doing? In return, what are they exchanging? Goods. So one person is giving the goods, furniture, another person is giving cash. So what is it? Exchange of goods and exchange of funds put together. This is called as transaction. Any problem in understanding the word transaction? Everybody. This point is very clear. Okay. Now, the next question is, sir, what is the meaning of event? You said that we have to identify a business financial transaction and event. Transaction understood, sir. What is the meaning of event? Event is always very good. It is a result of the transaction. It is the consequence of the transaction. Two examples which I'm wanting to give here. One is profit and loss. You prepare trading and P&L account. In the P&L account, you have something called as finally net profit. That net profit you transfer to capital account. In partnership, you prepare P&L appropriation account. You get final net divisible profit. You transfer that to whom? Partners capital account. Please tell me, what is the journal entry for transferring the profit to capital account? P&L account debit to capital account. P&L appropriation account debit to partners capital account. So you have recorded this, no? Is this a transaction? No. This is an event, which is the result of multiple transactions. How did I get the profit? I recorded income entries, I recorded expense entries, I recorded gain entry, I recorded loss entry. After that, I got one result. That result I'm transferring to some other place. So what is this? This is not a transaction. This is an event. Sir, why are you explaining all this? Is this relevant for exams? 100% yes. This is very well there within your syllabus. And high chance of a true or false question coming from this end. They'll give you one situation. They'll tell you this is a transaction. For example, recording of closing inventory is a transaction. True or false? False. It is not a transaction. Recording of an entry for closing stock is an event. Second example is closing inventory, closing stock. Recording of closing stock, what entry? We record two entry for closing stock. What is it? First is trading, closing stock to trading account. Closing stock to trading account. Second is closing stock to purchases. We'll be discussing all that in future. The entry what you record for closing stock, is it a transaction? Did you go and buy closing stock in the market and came? No. So closing stock is the result of the purchase of the goods and sale of the goods. In my example, what I gave for laptop, how many laptops did you buy? 10 laptops you bought. How much did you sell? 8 laptops you sold. How much is remaining? 2. And that 2 laptops as a closing inventory you recorded. Is it a transaction? This closing inventory, did it happen between business and some third party? No. So this closing inventory is a result of the purchase transaction and the result of the sale transaction. Purchase and sale, when I combine together, it is a remaining closing stock in hand. So closing stock is not a transaction, it is a event. Recording of closing stock is not a transaction, it is event. So the true and false question what I asked, recording of a closing stock is a transaction, true or false? False, because it is a event. So each and every theory that we're discussing is very important from the theory point of view. True and false point of view, direct question point of view. So now are you clear with what is transaction and event? Because if we don't identify the transaction, if we don't identify the event, how will you record it, boss? Cash account to capital account. For me to record, first I should identify, no, I should develop the capability of identifying the transaction and event. So the first step of accounting is to identify the transaction and event involved in the business. So are you clear with what transaction is? Are you clear with what event is? Okay. Sir, in business, we do multiple transactions. Should I record every transaction in the business? Should I record every transaction in the accounts? No. Only those transactions which is dealt with financial terms, that is only to be recorded. For example, there's a person, Mr. X. He came to me to attend a job interview. I took a job interview. I'm satisfied. I said, come to my company. Let's sign a contract. I wanted to come as an employee next month, 1st April. What is it now? It's April. No. 1st May, come on board with me as employee. And today we are signing one contract. We are signing one employment contract. Now, please tell me the day when the employment contract is signed, is this not a transaction? This is a transaction that happens between the company and the employee. It is a transaction. Can I record this transaction in the books of accounts? No, because there is no monetary value attached to this. If I record it, what will I debit and what will I credit? See, every transaction that is happening in the business, we cannot record in the books of accounts, because for me to record the data in accounts, I need to have a monetary value to it. So only financial transactions are recorded in the books of accounts. Non-financial transactions are not recorded. So what are we trying to identify? So we're trying to identify transactions. Which transaction? Financial transactions. And third, this financial transaction should have taken place in the course of doing the business. Let's suppose after the class gets over, all of us we are going theater, watching movie. Which movie is coming now? Good, bad, ugly. Nice movie, ugly movie. Nice, okay movie. Okay. We are going and buying ticket by paying 200 rupees. Is this a transaction or not? It is a transaction because it's a transaction happening between two people. One is us, second is the theater owner or theater. Is this a financial transaction? Yes, because money is involved. We paid paisa 200 rupees. Money involved, financial transaction. Can I record that in my books as business expenditure? Because this is not a business transaction. This is a personal transaction. In accounting, while doing accounting, what is important and what is relevant for us? A business financial transaction and event is relevant for us. Not all the financial transaction is relevant. A transaction which is happening in the course of business is relevant. Any random transaction I cannot take and record it. For example, let's suppose I'm paying 1 lakh rupees as fee for my son. So this is a transaction between me and school. 1 lakh rupees paid, fee also involved, money also involved. Can I record this transaction in my business accounts? Right, because this is not business transaction. This is personal transaction. So when a transaction is presented to you from the owner, will you record? You will tell, no, sir, this is not the BFT. This is personal financial transaction. In accounts, we cannot record the personal financial transaction. So you have to remove that. So as an accountant, you should have a capability to identify which transactions I should record and which transaction I should not record. That is the very first step. As an accountant, as a chart accountant, you have to learn that which transactions are relevant for me to record, which transactions are allowed for me to record in the business and which are not allowed. So first step is identifying a business financial transaction and event. Any problem in the first 3 points? Everybody. Online people, any problem in the first few points? Please tell me.
No, sir.
Now, all the transactions you are identifying that this transaction is to be recorded and not recorded, this is recorded or identified on basis of what? On the basis of evidence. This transaction is business. This is personal. This I have to record. This I should not record. On what basis do you decide? It is decided on the basis of evidence. So all the transactions are recorded in the business, in the books of accounts, only on the basis of source document, which is called as evidence. So evidence will play a very crucial role in accounting. You cannot record anything in accounting where there is no evidence to it. Because tomorrow, when your file is subjected to scrutiny by the government for tax, the first thing that they'll ask is, this 1 crore rupees, what expense you recorded? No, give the evidence for that. So if you do not produce evidence, the entire 1 crore will be treated as your income, and on that you have to pay some hefty taxes. So in accounts, for every expenditure that you record, for every income that you record, it should be supported by the evidence, evidence, evidence. No evidence, no accounting. No evidence, no identification. Are we clear with the first process? Now, once you identify a business financial transaction, second, what is important after that? So measuring that in terms of money is very, very important. What is the meaning of measuring in terms of money? First, it has to have a monetary value. That point is covered here itself. The most important point here, what they're trying to say is that this should have a common unit of measurement. For example, let's suppose I am a dealer in laptop. I am buying and selling the goods within the country. That is, I'm buying within the country, selling within the country. And I'm also doing the purchases from abroad. So let's suppose in India, I purchased goods worth or laptop worth 1 lakh rupees in rupees INR. Then I also purchased $10,000 of goods, $10,000 worth of goods from USA. So I paid US dollars. How much? 10,000. Both put together, as an owner, I am saying that my expenses is 1,10,000 rupees or 1,10,000. Totally, I'm telling. Will you agree with me? No? Why? This is 1 lakh. This is 10,000. You said financial. Finance. Ba, this is business financial transaction. Ba, I'm buying goods from abroad. Transaction between the company and the third party. Finance also involved. And this is happening in the course of business. So why can't I say 1 lakh plus 10,000 is 110 is my purchase? Sir, unit of measurement is different. Mathematics says that if you want to add two numbers, the base, the unit of measurement should be same. 3 kg plus 2 kg I can add. But I can't add 3 kg and 1 liter because kg is different, liter is different. So for you to add two things put together, the unit of measurement should be common. So here, what is the unit of measurement? Rupees INR, Indian rupees is the unit of measurement. So whatever data you record in the accounts should be converted into INR. So now the US dollar, how much you have spent? 10,000. So you have to convert that into INR. So please tell me, the purchase in the Indian rupees is how much? 1 lakh. Which I purchased in India. The one which I purchased from USA, it is $10,000. It is $10,000. $1 is costing how much? 80 rupees, let's suppose, round off. So 10,000 into 80 is how much? 8 lakh. 10,000 into 80, 8 lakh rupees. 8 lakh rupees. If I spend $1, 80 rupees is the money spent from INR. If $1 is equal to 80, then for $10,000, how much? Multiply. 10,000 into 80 is how much? 8 lakh. So now both of them have a common measurement of unit or common unit of measurement. So put together how much now? 9 lakh rupees. Now I have measured in terms of money and the unit of measurement is what? INR. Now you are good to go ahead and do the recording. So what is accounting? So accounting is a systematic process of identifying a business financial transaction or an event. Once you do that, second step is to measure in terms of money. Means convert, if there is any another unit of measurement, convert all of them to common unit of measurement, which is INR, and then you are good to go ahead and do the recording. Now tell me if you have any doubts in this. No. Online people, do you have any doubts in this?
No, sir.
This concept only, a concept called as money measurement concept was brought into picture. Money measurement concept. Have you studied this? 11th standard. Money measurement concept means all the transaction which is recorded in the books of account should have a money measurement. And what is the common denomination? INR. That is what the money measurement principle says. First step over. Second step over. Now let's enter the third step. What is the third step? Accounting is a systematic process of identifying business financial transaction, measuring in terms of money, recording. Technically from here, the third step onwards, the accounting aspect, the practical aspect of the accounting begins. From here, the accounting actually begins. So recording happens, accounting, the recording happens here. So recording happens through what? So recording happens through journal or subsidiary book. This journal is called as book of original entry, and subsidiary book is called as books, not book, books. Books of original entry. All of you have studied subsidiary book in 11th standard. We have something called as purchase book, sale book, cash book. So are this one book or multiple book? Multiple book. So it is singular or plural? Plural. So book means singular, books means plural. So journal, if you record only journal, it is book of original entry. Whereas subsidiary book is books of original entry. Why do they call this as original entry? Because this is the origin of the accounting. From here, the accounting begins. Origin means what? Starting point. This is the starting point. Accounting begins from here. The practical aspect of the accounting commences from here. Have you seen any feeder machine? Feeder machine. How many of you have had sugarcane juice? Sugarcane juice in the olden days, they used to put that sugarcane in that crusher. They used to put between that two things. Now, same thing, same technology. What they've done, they've covered a box on the top so that the flies and all doesn't go inside and get stuck. And what they've done, they've put a feeder. There's a mouth that there's an opening on the box. So if this is a box, there's an opening here. Inside that only the machine is there. The same machine, crusher, same machine. But box they've put with the opener here. In this opener only they put the sugarcane stick. So this is the starting point of crushing. This is called as feeding stage, feeder stage. Same way, your journal is the origin for accounting. This is where the accounting starts. Anything if you want to record, anything if you want to change, re-record, rectify, everything should come from journal. So I prepared journal, ledger, trial balance, final accounts. While preparing the final accounts, I found out there's some mistake. Can I do the correction on the face of trading and P&L account? Can I do any correction on the balance sheet? Oh, this is wrong. Cut it and write it. Can I do it? Not allowed. Any correction at the financial statement level? Not allowed. Any correction at the trial balance level? Not allowed. Any correction directly in the ledger also? Not allowed. Anything and everything has to be routed or rerouted through journal. So this is called as origin, the point of origin. This is where the accounting originates. That is why it is called as book of original entry. Originally, the data is recorded here. Originally, data is recorded here. Any problem? Everybody. When my God, 3 hours I'm going to take class. Who is going to shout at top of the voice? From my stomach, chest, fully, who is going to put efforts? Loudly, me. In return, what am I asking? Only response. Who's putting too much effort for shouting, teaching? I. For whom? You. In return, what do I expect? Response. For whom? Again, for you only. So that you don't sleep. If you respond, you're not doing favor to me. You're doing a favor to your own self. Because when you don't respond, our brain is designed in such a way that we'll go in sleep mode. Not just you. Even if I'm coming and sitting there, if I'm not actively participating in class, even my brain will go in sleep mode. Like how if we keep systems and laptop, if you leave it for 5, 10, 15, 20 minutes, automatically goes in sleep mode. We human beings are also designed that way only. So that is the reason every now and then what I do, I fluctuate, modulate my voice tone. Suddenly I'll shout. The person was sleeping. Oh, what happened to Sir? Why is he shouting? Like that, one jerk will come to that person. Correct? No. Every time I ask the question, you respond. Why? Because the more you respond, your brain will become more alert. The more you shout, no, the more you speak, no, your brain will be vibrating. And the brain will not go to sleep mode. Now understood? Okay. Till this, are you all clear or not clear?
Yes, sir.
Wonderful. Now, sir, while recording the transactions in journal or subsidiary book, are there any rules and regulations to be followed? 100% yes. So the two rules that you have to follow is one, golden rule. Second is modern rule. Today, I'll be finishing golden rule. Modern rule, time might not permit. We'll do it in the next class, but golden rule definitely I'll touch today. Recording in journal or subsidiary book happens only upon satisfying the two rules that has been laid down, which is either golden rule or modern rule. Now, sir, what are the total steps involved to ensure that the recording is done appropriately. First step is identify the accounts involved in the BFT. That is, once you identify a transaction, in that you have to tell me which account is getting affected. Now we took one example, no? What example? Sir, Ram purchases chair from Raja for cash. Let me rephrase this question. Ram purchased rupees 10,000 worth of share from Raja for by paying cash. By paying cash. First question. Accounting is a systematic process of identifying a business financial transaction event. My question is this a transaction or is it an event? Transaction event. So this is happening as a transaction between Ram and Raja. So it is a transaction, not an event. Event is what? Result of the transaction. So this is not a result. This is the fresh transaction. So this is a transaction. In this transaction, finance is involved or not? Money is involved or not? Yes. Is this happening in the course of business? Yes. Ram is buying this chair for selling purpose. We are accounting in the books of Ram. So yes, this is a business financial transaction. And what is the unit of measurement? INR. So money measurement, INR done. Now recording begins. The first step of recording is to identify in this transaction how many accounts are involved. How many accounts are involved? Accounts means what? I want to see which data is important for me to remember. Which data will influence my decision. That data I need to record in my books of accounts. Now my question is, I am preparing accounts in the books of Ram. In my books, will I open my account? Does it make sense? In my book, if I open my account, does it make any sense? Which means I am not going to keep a track of Ram's account. Do you agree with me? So in Ram's book, Ram account is irrelevant for me is what I am saying. What are you saying? Relevant or irrelevant? Irrelevant. Okay. Purchase transaction. Should I consider or not consider? Sir, purchase you have to consider, sir, because this is your expenditure for the business. Expenditure is helpful for my business because it helps me to reduce my tax. If the government says on your turnover 1 crore pay 30% tax, will anybody do business in India? No. From 1 crore rupees turnover, 90 crore, not 1 crore, sorry, 9 crore, 90 lakhs. 1 crore turnover, 90 lakh expenditure. What is the profit? 10 lakh. So to get the correct profit, allowing the expenditure to be subtracted is very, very important. Correct? Or else on 1 crore, 30% tax means how much? 30 lakh tax. Instead of that, if I allow expenditure, my profit is how much? 10 lakh. 1 crore turnover minus 90 lakh expenditure. What is the balance? 10 lakh. On 10 lakh, what is my tax? 30%. How much? 3 lakh. Where is 3 lakh? What is 30 lakhs? So expenditure is important for my business because it helps to reduce my income and helps me to ascertain the proper profit. So I need to record this purchase, sir, because if I record purchase, my income will come down, my profit will come down. Accordingly, my taxes will come down. So I have to capture this information. Okay, wonderful. Will I capture the term chair? No. I'll capture chair when when I purchased it, I did not sell it. As a closing stock, that time I'll capture. As of now, I'll not capture. So in this transaction, chair is not relevant for me. Noting that chair in my books of accounts is not necessary separately. Then, is Raja relevant? Yes. We have already paid the money to Raja. Why should I remember that person's name? I already made the payment to Raja. Do I need to remember his name? No. Imagine, no. You go to a departmental store. From morning till evening, how many customers will come? At least 500 customers. 500 billing. Every day 500 customers. In a year, how many customers? Think about it. Are you trying to tell me keep a ledger accounts for all the customers? Why? He's already paid the money. After paying the money, who is he? Who am I? Nobody is bothered. So why should I remember his name? So therefore, in this case, since I've already paid money to Raja, I don't need to remember his name, boss. So I will not open any account for Raja because it is not relevant. Cash account is relevant? Yes, because money is going out. So I have to keep a track of money coming in and going out. So how many accounts I have to open here, people? 2 accounts I have to open here. One is purchase account. Second is cash account. So the first step of recording is what? To identify the accounts involved in the business financial transaction. In every transaction, there will be minimum 2 accounts. More than 2 can be possible, but minimum there will be 2 accounts. In that, one will be having debit aspect, second will be having credit aspect. What that is, we'll discuss. So now, first step is to identify the accounts involved in the BFT. Then, second step, these accounts now, you have to classify what is the nature. Now, we have something called as purchase account. One is purchase account, second is cash account. Now, you have to classify what is the nature of this transaction. Now, if you're following golden rule, then this purchase could be classified either as personal, real, or nominal. If you're classifying this under modern rule, this could be either asset, liability capital, revenue, or expenses. So, classification of the nature of accounts depends on what rule you're applying. If you're applying golden rule, the application is different. If you're applying modern rule, application is different. Out of these both rule, which is the best rule? This is the best rule. Modern rule is nothing but a rule developed out of golden rule. Sir, when one rule already is existing golden rule, why modern rule? Because with golden rule or using golden rule, we were not able to account for the transaction in all possible ways. In other words, there were so many journal entries which we could not record using golden rule. Golden rule was created in, back so many years ago. So many years ago. At that point of time, what situation was there? In that situation, this rule was developed. The rule was no doubt good, a good base. But that rule today was not applicable. It was quite outdated. So the experts had to, develop the modern rule on the basis of the golden rule. So golden rule they kept as a base, and on that basis they developed a big rule called as modern rule. So this rule is something which CBSE people you are familiar with. But in matriculation syllabus, unfortunately, we didn't have this modern rule. Time and again, in the entire CA foundation journey, in the entire CA intermediate journey, time and again I'll prove you why the golden rule is a failure. At so many places, you cannot record a journal entry with the help of golden rule. That also I'll prove it. So, you'll classify the nature of accounts either using golden rule or modern rule. I'll be using golden rule and the modern rule only for chapter 2 because you might get a question from ICI. Record this as per golden rule. Record that as per modern rule. But the moment I, cross the second chapter and go to other chapter, we will never ever in life apply golden rule. We'll only and only apply modern rule. Now coming back. Once you identify the accounts involved and once you classify the nature of accounts, the third step is to apply the rules of debit and credit, either using golden rule or modern rule. By applying the rules of debit credit, you will ensure that the double entry system of accounting is being followed. Now, what is double entry system? We'll discuss. And all these transactions are recorded on the basis of evidences. So these are the steps involved. All these steps one by one, when you complete, only then you are allowed to record the entries in the journal. Otherwise, you cannot record it. So as an accountant, if I'm recording any entry, I have to take care of all these points together. If all these are taken care of, then you are given green signal to record the entries in your accounting records. Any problem? In this, what I have not discussed with you so far? What is golden rule? I have not discussed. What is modern rule? I did not discuss. What is double entry system? I have not discussed. What is the meaning of debit credit? Not discussed. What is the meaning of accounts? Not discussed. When will we discuss? In some time. What am I discussing now? I'm just trying to give an outline perspective of what is accounting. I'm just trying to discuss accounting process with you. Accounting yet I have not started. Accounting process and outline discussion. Melotama. We have not seen the account. Real accounting is yet to begin. The real accounting is yet to begin. So, accounting is a systematic process of identifying a business financial transaction event, measuring in terms of money, recording to the journal or subsidiary book. Journal separate chapter, subsidiary book separate chapter. And next step is classifying through ledger. My question to all of you, why ledger? From journal, why can't we directly prepare the trial balance? Yes. Journal is like this bucket. So this is bucket. Yes. Assume it is bucket. In this bucket, I have these purple color balls. I have these orange color balls. I have these black color balls. I have these green color balls. I have this blue color balls. I have this pink color balls. Which means journal is one dump yard. You know what is dump yard? Everything is dumped. Because you have to record all the journal entries one by one in a chronological order. What is the meaning of chronological order? Record as and when the transaction takes place on day-to-day basis. Let's say today morning till evening, 5 transactions took place. These 5 transactions today you have to record. In any order you can jumble and write. No problem in that. But today's transaction you should record today only. Today's transaction you cannot record tomorrow. That is the meaning of recording the transaction in a chronological order. So what happens? As and when I'm doing the transaction, I'm recording. So today, let's suppose I did purchase transaction. So purchase entry first recorded. Then I did sale transaction. Then I did one more sale transaction. Then I spent money for buying tea expenses, transaction. Tomorrow again, purchase. Tomorrow again, sale, again, expenses. So like that, this goes on and on and on and on. As a owner, I'm asking you, 1 year business over, no? Tell me what is my total purchase. From journal, tell me what is my total purchase. Are you trying to tell me that? So we'll take one journal book. We'll flip the pages. Oh, here, purchase 3,000. Next, 2,000. Next. So every time I ask, are you going to take the journal book, flip the pages and use the calculator for totaling purpose? You can do nothing wrong. But how much time consuming it will be? Think about it. So experts said that, this journal will not be sufficient. The way the format of the journal is created, the format of the journal does not facilitate totaling. So if I want to know what is the total purchase, if I want to know what is my total sale, if I want to know what is my total expense, journal does not help me in totaling. Hence, for totaling purpose, again, all the transaction, you have to reclassify in different account. So now, journal is like a bucket where all the transaction you've dumped. This purple ball is there, no? Purchase. This blue is there, no? Sales. This black is salary. Green is cash. Like that, everything is dumped in one shot. In this bucket, if I ask you, how much is green ball? Can you say? Here you can say at least because you can count 3 only are there. In real life, how many transactions in a year? How many cash transactions? If I ask you what is a cash in hand, can you tell me? With the help of this journal, not possible. So journal does not facilitate in totaling. Hence, all the transactions, one more time, you have to post in a place called as ledger. So ledger is basically we're classifying the accounts. So what happens? I'm now opening a green bucket. I'm opening now blue bucket. I'm opening now pink bucket. So all the green balls are transferred to green bucket. All the blue balls are transferred to blue bucket. And all the pink balls are transferred to pink bucket. So now in this bucket, how many green balls are there? 3 green balls. So what is my total purchase? 3 lakh rupees. Each ball 1 lakh. 3 balls, 3 lakh. How many blue balls are there? 1, 2, 3, 4, 5. 5 lakhs. Tea expenses. 3 lakhs. So 3 lakh tea expenses. Example, ma. So now, journal did not facilitate me in totaling. But ledger, what happened? Separate account I opened. Separate account I opened. And I put all the accounts of similar nature under one category. I put all the accounts of similar nature under one category. This helped me in totaling. So ledger is a place where you record all the transactions for totaling purpose. For what purpose? Totaling purpose. So how is ledger prepared? So like this bucket will prepare? No. Accounting rule said that you have to prepare the ledger in T-shaped format. Account is a place where you count the value. Aha. Oh. Sir, account is a place where you count the value. So like that, you open multiple accounts. In what format? T-shaped format. In that, left-hand side is called as debit side. Right-hand side is called as credit side. If you record any transaction on the debit side, we say the transaction is debited to the account. If I record any transaction on the credit side, we say we have credited the transaction to this account. So are you able to understand the meaning of debit, credit, debited, credit? I've not explained the meaning yet. I'm just telling you the account, how it is debited and credited. Now, why are we preparing ledger? For totaling purpose. Are you clear with this point? Accounts, that is ledger accounts, is prepared for totaling purpose. Because the format of the journal does not facilitate total. How journal needs to be done, how subsidiary book needs to be prepared, what is the difference between journal and subsidiary, What is golden rule, modern rule, what is account, what is debit, what is credit, what is double entry? Nothing I explained so far. I'm only discussing the step-by-step procedure. So once you understand the procedure, we'll go into each aspect one by one. Once the ledger is done, now the ledger will give you one balance. Balance is nothing but the total of that account. Ledger balance, have you heard? What is the meaning of ledger balance? It is the total of that particular account. Now please tell me, from this ledger, can I directly prepare the trading and P&L account? Can I prepare the trading and P&L account directly? The answer is yes. You can prepare it. But we don't prepare directly because we have a fear that what if by mistakenly I forget to take one account to the trading and P&L. So I don't have a control from the ledger to final accounts. Hence, we open one intermediate pathway called as preparation of trial balance. To check what? To check the arithmetical accuracy. So when you prepare the trial balance, what happens? All the ledger accounts one by one are captured. All the ledger accounts one by one are captured. If all the ledger is captured, if all the ledger balances are captured, and while recording, if you had followed the double entry system of accounting, this trial balance total will automatically match. While recording, had you ensured the accounting rules and regulations properly followed, had you ensured the double entry system is properly followed, and had you ensured all the ledger balances traveling here, everything is done properly, then when you transfer all the data to the trial balance, at the end, the total of the both column, that is one is debit column, second is credit column, the total of both will become same. If the total of both is same, which means all the data that you prepared so far is in accordance to accounting rules and regulations, all the data that you prepared so far is as per double entry system of accounting, and all the ledger balances without leaving anything, you've brought it here. Imagine, in business, there are how many ledgers? Hundreds of ledger. In that one ledger also, you by mistake forgot to take it to trading and P&L. How will I know what I've missed? So there's no control. If I take the ledger directly to trading and P&L, I don't have any control which ledger I took, which ledger I did not take. So to have a control, we transfer everything to a place called as trial balance. So now when the trial balance is prepared, and the total of both the sides are tallying, which means you have ensured the double entry system of accounting is followed. Now from here, you're good to go and prepare the final accounts. So in trial balance, what did you do? You have summarized all the accounts. So accounting is a systematic process of identifying a business financial transaction and event, measuring in terms of money, recording through journal or subsidiary book, classifying through ledger, and summarizing through. Summarizing happens in trial balance, P&L, and balance sheet. So in the trial balance, what you record? Total sale is 1 crore. Total purchases 50 lakhs. Like that, you summarize the data. Hence, trial balance is a summarized version of the accounts. But with the trial balance, will I get any meaningful information? From the trial balance, will I get to know my profit and loss? No. Hence, from the trial balance, we transfer all the data to P&L and balance sheet. So from the trial balance, all the accounts which has got the flavor of income, expense, gain, and loss. From the trial balance, all the account from which you get the flavor of, taste of income, expense account, loss account, gain account, all this will be transferred to your trading and P&L account. Bypassing a closing entry. What is closing entry? We're ready to discuss. And all the other accounts remaining in the trial balance, apart from these four, which has got the flavor of asset, liability, capital, will be taken to balance sheet. So from the trial balance, few data goes to your P&L account and few data goes to your balance sheet. So P&L account is prepared. Trading and P&L account is prepared for what purpose? So to measure the financial performance of the business. Performance is reflected to the profit and loss of the business. And balance sheet is prepared to measure the financial position of the business. What is the meaning of financial position? On a particular date, how much cash is there in my hand? On a particular date, how much money is there in the bank? On a particular date, how much money I'm supposed to receive from my debtor? On a particular date, how much money I'm supposed to make the payment to creditor? On a particular date, how much money I owe to the banker? So I get a crisp information about the position of each and every assets and liabilities of my business. Again, I'm trying to give you an outline perspective. I've not gone into depth. I'm just trying to discuss the overall overview of the accounting process. So accounting is a systematic process of, all of you loudly. Accounting is a systematic process of identifying business, financial transaction in event, measuring in terms of money, recording through journal or subsidiary book, classifying through ledger, summarizing through trial balance, trading P&L and balance sheet. And upon preparing the P&L and balance sheet, we are able to assess the financial performance or the financial position of the business. Now, these two documents, that is profit and loss and balance sheet put together, is called as what? DS. Very good. These both put together is called as financial statement. Financial statement. This is nothing but the report card of the business. Like how all of you get report card from your school after completing your respective examination. So much marks you got, so much marks you failed, etc., etc. Like that. This reflects the performance of your business. So this is a report card to the business. The financial statement that you prepare is a report card of your business. Any problem? A lot of people think that accounting is over with the preparation of the balance sheet. The answer is no. After this, you have to do two more steps. The next step is to interpret or analyze the financial statement. As a owner, as a lender of the money, that is banker, I am not interested with just only P&L and balance sheet. I need to evaluate your accounting ratios. I need to check the further details of the company. So I will be using multiple analysis tools to evaluate your financial statement. So in that, one such tool is accounting ratio. Like that, we have comparative size statement. We have common size statement. We have something called as trend analysis. We have something called as fund flow statement. We have something called as cash flow statement. All these are the tools used to analyze the financial statement. There's a company whose profit 1 crore. Another company whose profit is 2 crore. Looking at the profitability, which company looks much better? B looks much better. But with B, there's a problem. If you look at the balance sheet of B, current liability 1 crore, current asset 20 lakh. Whereas A, company A's balance sheet, current liability 30 lakhs, current asset 90 lakhs. What do you understand by this? I meant to tell you what is current asset, current liability, but since you're coming from the 12th background, all this is discussed there. So I'm sure everybody is knowing what is current asset and current liability. Please tell me, what is the problem with B? Current ratios are screwed up. Yes. If you look at it, in next 1 year, I have to pay 1 crore. But how much money I have to pay this 1 crore? Only 20 lakhs. Means remaining 80 lakh I have to arrange. If I don't arrange, I'm not screwed. I'm royally screwed. If you don't arrange 80 lakh rupees in next 1 year, gone. Which means this company which is profitable today, how long will it take this profit to vanish? 1 year, 2 years, next 1-2 years, this company is over, finish. Because if you don't make the payment to your creditors on time, they will not supply the goods to you. If they don't supply the goods to you, from where will you do business, boss? If you don't do the business, from where will you earn the profit, boss? So today, the business which is looking very good, because 2 crore profit, much better than the competitor. Looking at this profit, don't invest in any company. You have to evaluate the other metrics of the business. That is where the analysis will play a very crucial role. So accounting ratios, cash flow statement, like the multiple tools of analysis you have to do. Only then you have to decide, should I invest in that company or not? So analysis and interpretation of the financial statement is possible only when there is accounting records. So if this is not a part of accounting process, then how will I be able to analyze? Hence, analysis is also a part of your accounting process. And once you analyze the accounting data, you don't keep the data with you. You communicate the information or analysis to the users of financial statement. How many users? Those 7 people. For those 7 people only, you're doing so much of drama. So this is the entire end-to-end accounting process. Tell me, people, in this, do you have any doubts? Meaning of accounting as per American Institute of Certified Public Accountants. So one more time you're going to explain accounting? No. I'm just telling you, if you take your chapter 1, unit 1, on page number 1.4, the committee on terminology set up by the American Institute of Certified Public Accountant. That is American Institute, which CPA, Certified Public Accountants, has formulated a definition for accounting in 1961. My definition is much better. What is it doing? Accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money, transaction, event, which are in part at least of financial character and interpreting the result thereof. What is the language? Aha, super language. Now what did I do here? I made this simplified. Same thing. Meaning of accounting as per Certified Public Accountant, American Institute. What is saying? Sir, accounting is what? It's not a systematic procedure. As per him, it is a art. You think that if I draw well, I'm an artist. No. Any person who does any kind of performance in their respective profession, everyone is artist. I'm an artist of accounting teacher. I'm an artist of, what do you say? Accountancy. I'm an art teacher, accountancy, art teacher. So like that accounting, not everybody can record the accounting. A person who knows how to do accounting, who's got the art of accounting, only can account. According to him, accounting is not a normal job. It is an art. You have to learn the art. Art of what? Art of recording, classifying, and summarizing. Where is identification? Where is business financial transaction in event? Where is measuring in terms of money? Sir, here. In terms of money, okay, got it. Where is transaction in event? Down. Sir, which means whatever you discuss, same thing he said. But what is the order? Like if I ask you, if I throw one ball and ask you to catch, easy Lavakri can catch. If I put all the 10 balls, which will you catch? So like that, all the data is scattered, thrown at you. It's very difficult to process because you have to go one by one. Accounting is an art of recording, classifying, summarizing. Before recording, what are you supposed to do? Identify what if there's a transaction or event. And once you identify transaction event, you have to measure in terms of money. Then recording, then classifying, then summarizing. Then you have to interpret. Then you have to communicate. All this is the process of accounting. Same thing, but in a different manner. So I've given a chart. Now, if they ask you, define meaning of accounting as per American Institute of Certified Public Accountants. So these are the keywords given. With that, you can frame it. Yes. Define, if they say no, you have to write exactly the same word. But they'll not ask. 99.99% they will not ask the definition. They might ask the meaning of it, but they'll never ask definition. But I say as always, judge me and I'll prove you wrong. So here and there, one or two definitions alone you have to study, otherwise not required. So same thing. Do I need to again do it? Not required. No, people are silent, which you want to, I'll do it one more time. No? Okay. Now, one more minute. I'll just explain this part, then I'll give you a break. Identification of a business financial transaction event, measuring in terms of money, recording through journal, classifying through ledger. This process is called as bookkeeping. Whereas all the other rest of the part, which is summarizing, interpreting, analyzing, and communication, is part called as accounting. Accounting starts with bookkeeping, and accounting starts with bookkeeping, and this dialogue you studied in 11th standard. Accounting starts with bookkeeping, and so bookkeeping is separate, accounting is separate. Bookkeeping is done by junior accountant, whereas accounting is done by senior accountant, because it requires more experience to prepare the trial balance, trading P&L balance sheet, to analyze and communicate. You need experience. So this part is called as accounting. Bookkeeping is the basic part. Bookkeeping and accounting is done on the basis of accountancy rules and regulations. So what is accountancy? Accountancy, it is a set of rules to do the bookkeeping and the accounting. Accountancy is a set of rules to do the bookkeeping and the accounting. A lot of people think that accounting and accountancy both are same. No, it's not the same. Accounting means to do the work. And on what basis are you doing? On the basis of the rules and regulations that has been set. And that rules and regulations is called as accountancy. Accountancy is nothing but rule book. Any problem? Online people, any problem?
No, sir.
No, sir.
Sir.
Wonderful. We'll now take a short break. It is now 4 minutes break, 5. We'll start with the class. Thank you. Yes, people, welcome back from the break. So let's continue. So, guys, in the first half, we try to understand what is accounting, why accounting, and why accounting rules in a very layman language. Then we understood what is accounting process. In the accounting process, you might have a lot of doubt as to what is journal, what is ledger, what is trial balance, what is debit, what is credit, what is account, what is double entry system of accounting, what is evidence, everything we had to discuss. Now the discussion one by one will start. So now in the second session, what I'm going to discuss is what is the meaning of debit, what is the meaning of credit, what is the meaning of account, and what is the golden rule. Till this, my discussion will end for today's class. So can you see this gentleman on the screen? He is called as Sir Luca di Pasquale. He is an Italian mathematician who is commonly referred to as the father of accounting. Oh my God. So father of human being, understandable. Father of accounting? Yes. Because he is the person who's coined the concept of accounting. Sir, you are telling this guy is a mathematician. What has mathematics got to do with accounting? Hello, boss. Mathematics is based for everything. Mathematics is based for many things. From mathematics, accounting has been evolved. So he's a person from mathematics. He said that accounting as a separate branch needs to be figured out, and we have to put the process in place so that we can get the desired results. So Sir Luca di Pasquale, who is an Italian mathematician, he's the one who has conceptualized the concept of double entry system of accounting. Double entry system of accounting. What is double entry system of accounting? He says that every transaction that you record has got minimum twofold aspects. In that, one aspect is going to be debit aspect, another aspect is going to be credit aspect. Any transaction take will have two aspects. I'm not telling two accounts. There can be multiple accounts. In a transaction, there could be even 10 accounts. But you take the total of all the account, in that will be one set of debit, another set of credit. And at the end of the day, the total of the debit and credit should be equal. So he's that person who's conceptualized the concept of double entry system of accounting. The beauty of the double entry system is that if you have made any error, the trial balance or the balance sheet, by not tallying, you'll be able to identify that some mistake that has happened. So if you have followed the double entry system of accounting properly, the trial balance will match and the balance sheet will match, which means that the chances of error is not there. See, error still can be there. Double-sided error can be there. That will study rectification. But if you ignore the error part, the concept, you should appreciate the way the design is being done. The design is done in such a way that at the end, when your balance sheet tallies, you get to know that the accounting what I've done is right. So in that beautiful way is designed the concept. So Sir Luca di Pasquale, who is an Italian mathematician, he's the one who has conceptualized the concept of double entry system of accounting. Means what? Every transaction will have double impact. In that, one impact will be debit impact, and another impact will be credit impact. Now, my question goes to all of you. What is the meaning of debit and credit? Those who have already seen my class or those who are my student, you don't answer. You know what it is. Other people, what is the meaning of debit and credit? Meaning. Fast, online people, anybody? What is the meaning of debit and credit? Anybody here who has not seen my classes early 11th? But not been, okay, you, both of you, okay. No, you there with me in 12th. Anybody who's not been with me in 11th, 12th, has not watched any of my classes? Okay. Only two gentlemen? Okay. 3. Please tell me, what is the meaning of debit and credit? Meaning. Debit what comes in, credit what goes out. Wonderful. Next, anybody else? Online people, anybody? What is the meaning of debit and credit? Harsini? Please tell me. What is the meaning of debit and credit? Harsini, kana irkiya kana mala?
Yes, sir.
Yes, kana. Any idea of what is the meaning of debit and credit? Just give it a try. It's okay. Even if it is wrong, nothing wrong. Because we're in the learning process now. Anybody else wants to answer? What is the meaning of debit and credit? Sir, debit and credit is nothing but plus and minus. My dear friend, what you said was not meaning. That is a rule. There is a rule of debit and credit. What I asked is meaning of debit and credit. So debit and credit is nothing but plus and minus. Sir, if it is plus and minus, why debit and credit? Why complication? Why? Because sometimes the debit will act as plus, sometimes it acts as minus. Sometimes credit will act as plus, sometimes it acts as minus. So it is very difficult for me to tell when I should treat this as plus and when I should treat it as minus. For example, if I talk about purchase, in a business, how many purchase transactions? N number of purchase transactions. One purchase I did for 1,000 rupees. Another purchase I did for 2,000 rupees. Will I add or minus? I did another purchase of 2,000. So if I want to know what is my total purchase, will I add or minus? Add. So plus 2,000. I did another purchase 3,000. Add 3,000. Another purchase 5,000. Add 5,000. Total, please. 11,000. I did sale now. 2,000. I did further sale of 4,000. How much? Add. I did further sale of 6,000. Add or minus? Again add. I did a further sale of 7,000. Add. Total how much? 19,000. My question is, in purchases, if I wanted to know purchase total, you said add. All the transactions, you said add. If I want to know the total of sales, you said again add. But all of you know purchase and sale are both opposite. If sale is plus, purchase is minus. Because from my sale of 19,000, if I minus the purchase of 11,000, I get to know the profit of 8,000. So now, sir, sometime you're telling add here. Purchase also add, sale also add, result you're telling minus. Now I'm getting confused, sir, what to add and what to minus. So same confusion was existing in the earlier years also. It was very difficult for people like us to tell that when you should add and when you should minus. People are getting confused. So they said that we will not tell people what to add and what to minus. We will introduce a new concept called as debit and credit. With that, we will give one rule. Upon following the rule automatically, the people will know what to add and what to minus. Consciously, we will not ask them to add and minus. But applying this rule and debit credit concept, subconsciously, they will add and minus on their own. How? The purchase account should be debited. So I opened a T-shaped ledger. Purchase account. Debit side I recorded. To cash. How much? 1,000. To cash. 2,000. Again to cash. 3,000. Again to cash. 4,000. So what is my total purchase now? 11,000. 10,000. Here what it is? 1,000, 2,000, 3,000 and 5,000. Let me make this 5,000. Now 11,000. Agree with me? Now, did I tell you to add and minus anything here? No. I just told you, record all the purchase on the debit side of the purchase account. At the end, you have to get a total balance. How do you get the total? Debit side, all I have total added. If there is anything on the credit side, you subtract, minus. In other words, if I have to talk, let's say, about cash account. What did the rule say? Debit what? Comes in. Credit what? Goes out. If money is coming in, 6,000, record on debit side. If money 7,000 is coming in, debit side. Money 9,000 coming in, debit side. If money going out, 2,000 credit side. Money going out. Now tell me what is the balance cash in hand. So you were taught that please check the total of both the sides. Which total side is highest? Debit side is highest. So what is the total of the debit? 6,000, 7,000, 9,000. How much? 22,000. You added or subtracted? You added everything. All the debit items you added. Credit item? 2,000 plus 5,000. Total how much? 7,000. Again you added. But the way the ledger balancing was done, by following the rules, you got one balance. How did you get that balance? 22,000 of debit. If I minus from 7,000 credit, balance is how much? 15,000. So while balancing the ledger, anywhere in 11th, 12th so far, did you consciously apply your mind? Oh, here I'm adding and here I'm minusing and then I'm getting the balance consciously when you're putting the effort. You just substituted the rule. You applied the rule on this ledger. You just added the debit side. From that, you subtracted the credit side. You got the balance. So consciously, this I have to add, this I have to minus. You did not consciously decide. Everything happened with the flow. Everything automatically happened. Just you followed a process, and that process took care of addition and subtraction. That is why the concept of debit credit was introduced. Otherwise, if the debit credit is not there, people will get confused. Should I add minus? Add minus. Because add minus is very difficult to make people understand. That's why these experts felt that no, let's not give any add minus directly. This plus symbol is there, no? This plus symbol will wrap up the wrapper name called as debit. This minus symbol is there, no? Will wrap up with the wrapper called as credit. This debit is there, no? This plus will again wrap up with the wrapper called as credit. This minus is there, no? Will wrap up with the wrapper called as a debit. So how many plus? 2 plus. How many minus? 2 minus. 1 plus debit, 1 more plus credit. 1 plus credit, another plus credit. Plus plus is na. Sorry. 1 minus debit means another minus also credit. So now debit and credit is nothing but plus and minus only. But this plus and minus is wrapped up with a wrapper name called as debit and credit. And with this, when you apply the rules and regulations, automatically the addition subtraction takes care of. Any problem in this? So debit and credit is nothing but plus and minus. Sometimes debit will act as plus, sometimes debit will act as minus. Sometimes credit will act as plus, sometimes minus. So when it should take as plus or when it should be taken as minus, you don't decide. The rule will tell you what needs to be done. You just follow the rule, automatically plus and minus will be taken care of. Clear or not clear? Clear. Now my question goes to all of you. Let's suppose there's a transaction. There's a owner called by name Ram. Ram introduced 10,000 rupees cash as capital. What is the journal entry? Ram introduced 10,000 rupees cash as capital.
Bank cash account data to Ram's capital account.
Sorry, cash account DR to
Ram's capital
Ram's
account.
capital. My question goes to all of you. Those who have already done class with me, you not open your mouth. Others. DR means what?
Debit.
School, what they have taught? School, what they have taught? Debtor. DR stands for debtor. Yes or no? In school, what they taught? That you tell me. Cash account, debtor. In school, what they taught? That I'm asking. Teachers, what they said? Correct. So all those who learned that DR stands for debtor, my dear friends, you'll be shocked to know DR doesn't stand for debtor. Oh my God. So DR stands for debit. Sir, how, sir? Look at the logic, sir. CREDIT. In this, I'm taking C and R. Abbreviation CR makes sense. So in credit, CR is there. In debit, where is DR, sir? R, where it is R, sir? In the entire accounting terminology, only one word to have D and R is debtor. So everybody assumed that DR stands for debtor. DEBTOR. DR. So DR stands for debtor. So when you do a credit sale, that time the entry is what? Debtor account debtor to sale. This stands for debtor, is it? DR stands for debit. Now the question is, sir, from where did that R come? From where did that R come? Who is the father of accounting? Sir Luca di Pasoli, Italian mathematician, Italian language, Latin, whatever you say. In their language, it was never debit. It was debier. It was never credit. It was credier. So when he conceptualized this concept, according to him, it was debier and credier. And this debier in short form, he called as DR. Abbreviation he gave as DR. Because every time I can't keep telling debier, credier, it's too big to tell. So he conceptualized a abbreviation called as DR, and from credier, CR. What we did, we converted the debier into debit in our language. In English language, we made it to debit and credier into credit. But as a token of respect and love to the person who has done so much for us, he gave a DRCR. No, we said that as a token of respect, let's continue the word in DR and CR for him. So we adopted the DRCR as it is, and for debit, the abbreviation is DR, and for credit, it is CR. So DR is originating from the word debure. Just go and Google meaning of debure. You'll get the information. Unfortunately, in our ICI module, they have played with your emotions. Sir, look at E. Pasoli. France, Italy, all same. He's a mathematician. Arithmetic, geometry, whatever is the name. He has conceptualized this concept of double entry system of accounting, double entry way of bookkeeping. Now, he used the term debit, DR, and credit, CR in his books. These were concepts used in Italian terminology. Try to say this is an Italian mathematician. Italian terminology. Debit comes from the Italian word debito, which comes from the Latin debita and debio, which means this is the money that we owe to the proprietor. Actually, it is debure. You can go and check in the Google also. Debure. Debure ka short form is DR. Creditor ka short form is CR. Here, had they used the word debure and creditor, I would have been more happy. Unfortunately, they have not done that. So tell me from where debit to DR is coming. Debita, debebo, debeo. Where is R? I'm still searching R. All of you Google now. Fatafat. Debure meaning. Type in Google. What are you getting? Debure meaning. Loudly. No phone. Ah, very good. Then. Sir, you also do, sir. Why are you keeping idle? Okay, I also do. Deber means to owe or to be indebted in Spanish. The term debit is derived from the word debure. Can I take the screenshot and put that in group? The term debit has been derived from the word debure. Now tell me, people, am I right or the book is right? How old now? Yes. Now, are you clear that in a journal entry, DR stands for debit? It is not debtor. Debtor is basically our customer to whom we have sold the goods on credit. We have sold the goods on credit. So that particular person is a customer. What is my customer doing in my journal entry? Cash account, customer to Ram's Capital. What is my customer doing in every entry? And moreover, the format of the journal entry, whatever transaction record, one you record in debit column, second you record in credit column. So this first line goes to debit column, second line goes to credit column. How on earth this become debtor? Think about it a little bit. How this became debtor? What does debtor got to do with this journal entry? Nothing. So DR stands for debit, debit, debit. So the first line is talking about debiting the amount in that account, and second line talks about crediting the amount in that account. So it is always debit and credit, not debtor and creditor. Am I loud and clear? Yes, sir. Wonderful. Now comes the very, very important aspect, the rules of debit and credit. How many rules are there? Two rules. One is golden rule, which is also called as traditional approach. Another is modern rule, which is called as American approach or accounting equation approach. I'll sum up my discussion with traditional rule, golden rule. Golden rule says that, the olden rule says that any account in a transaction, so the transaction that I took here is Ram introduced 10,000 rupees as capital, correct? In this transaction, how many accounts are affected? Two accounts are affected. One is cash account and second is Ram's capital account. So in any transaction, you take any account, you will be able to classify that account either as personal account or real account or nominal account. You take any transaction, any account, you will be able to classify them under personal, real or nominal. Absolutely nonsense. There are some transactions where I'm not able to classify. I'll be discussing that in the next class. But we have to go with the rule. What does the rule says? This rule says that classification of the rule says that transactions could be bifurcated or accounts could be bifurcated into two categories, personal and second is impersonal accounts. Under impersonal, we have something called as real and nominal. So what does a nominal rule says that? Nominal rule says that in a transaction, if you come across any item in a transaction, if you come across any item which has got a flavor of income, gain, and expenses or losses, if any, in any transaction, if you come across any account, if that account has got a flavor of income, if that account has got a flavor of gain, flavor of expense, flavor of loss, then all of these are called as nominal account. And the rule that has been laid down is debit all expense and losses. Debit all expense and losses. So if you come across any expense and losses in the business, you have to debit them and credit all income and gains. And if you come across any income and gain, you have to credit them. Any problem? Clear with the nominal account, which means all the accounts which is coming in your trading and P&L account is my nominal account. All the items coming in a trading and P&L account. All the items coming in trading and P&L account is your what classification? Nominal classification. Wonderful. So what is real accounts? All assets are real account except bank, debtor, bills receivable, prepaid expenses, accrued income. All assets are real account except these. So if these are not coming here, where will it go? Will it go to nominal? No, because these are not flavor of income, gain, expense, loss. So this will not come in nominal, nor this will come in real. So where will this go? Automatically personal account. Why? The logic will discuss. This you wouldn't have heard anywhere. This is by my experience. You take any kind of assets, tangible assets, any kind of assets. Debit what comes in, credit what goes out. The rule is what? Debit what comes in. If I buy a phone, tangible asset, what is coming in? Asset is coming in. So when the asset is coming in, what are you supposed to do? Debit. If I'm selling the asset, asset is going out, credit. So all the assets, debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So all the assets are real account except that except is very important. Except bank, debtor, bills receivable, prepaid expenses, accrued income. You are saying current asset constantly, current asset is wrong. Because current asset includes other items also. Inventory. So all current assets are not excluded. Selected items are excluded. Why? Because these do not fit under the category of real. They fit into the category of the personal account. So all assets are real except, loudly, except bank, debtor, bills receivable, prepaid expenses, accrued income. What is the rule? Debit what comes in, credit what goes out. Wonderful. Let's do one example. Please tell me in this transaction, what is the first step? So accounting is a systematic process of identifying a business, financial transaction and event. Transaction or event? Think and tell me. This is a transaction because this is a transaction happening between businessman and the person who's selling the goods. The person from whom we are buying the goods. So this is a transaction. Second, financial or non-financial? Since money is involved, financial. Is it happening in the business or personal life? Business. So are you trying to say me this is BFT? Okay. Measure in terms of money. What is the measurement? Rupees INR. Perfect. Okay. Next. Record it through journal. In journal, what is the first step? What is the first step of journalizing? Identifying the accounts involved in the BFT. Please tell me in this transaction, how many accounts are involved? First is identify the accounts involved. Sir, in business, I will not open business account. In business, I won't open the goods account. I will not open any of these other accounts. So only two accounts that I open is purchase and cash. Purchase is important because that is my expenditure. Cash is important because I need to know how much money is there after paying the money. How much money is left in hand after making the payment. So two accounts are involved. So now the accounts involved are purchase account and cash account. Do you agree with me? Second step is classify the nature of accounts as per golden or model. So we are following now which rule? Golden rule. As per golden rule, purchase and cash can be classified either as personal, real or nominal. So please tell me, purchase is real, nominal or personal? Why you say nominal? Because purchase is giving me expense ka flavor. So all the expenses is nominal account, and nominal rule says what? Debit all expense and losses. Debit all expense and losses. So once you classify the account, this is nominal account. You'll apply the rule. So what is the rule saying? Debit all expense and losses. Debit all expense and losses. So by applying the rule, purchase should have debit or credit? Debit, because debit all expense and losses. And you have to follow double entry system. Which what? If this is debit, the corresponding should be credit, because you are following double entry system of accounting. Every transaction should have twofold impact. In this, if one is debit, other should be credit. But we will not get the other item as credit like this. For that also, we'll follow the same step. Please tell me, cash is what classification? So all the assets are real. So this cash as per you is current assets. So can I exclude the current assets? No. All the current assets cannot be excluded. So here we'll exclude only those selected items which I said. So all the assets are real except bank, debtor, bills receivable, prepaid expenses, accrued income. So if cash is real account, what is the rule says? So debit what comes in, credit what goes out. Debit what comes in, credit what goes out. When I'm buying the goods, when I'm making the payment, cash is coming in or going out? So cash is going out. Cash is going out. So should I debit or credit? Credit. Credit what goes out. So what is my journal entry, people? Purchase account debtor. It is debit to cash. How much? 10,000, 10,000. Any problem? Any problem? Did you consciously decide that I should add this? Did I decide this is minusing? No. Will not consciously do anything. Just apply the rule. Automatically the rule will take care of addition and subtraction. Any problem? The goods what you purchase, no? Let's suppose these are chocolates. So you're into chocolate business. I like a lot of chocolates. With chocolate? Yes. Now, I'm a chocolate businessman. I deal with chocolates. Now, one fine day, I was looking at the chocolates, no customer coming. I was constantly looking at the chocolates. I got tempted. I took the entire box home, full Ferrero Rocher box. I went home, finished it. Can I say goods withdrawn for personal purpose? Because I withdrew the chocolates from my business. I took it home, gulp it down, everything. Did I sell it? No. Did I sell it? No. Then, can I call this as a transaction where goods is withdrawn for personal purpose? Goods withdrawn for personal purpose. In that case, what is a journal entry? Very good. Drawings account debit to purchases. Now, what is the meaning of purchase? What is the meaning of purchase? Buying goods. Wonderful. Accounts pay. What is the meaning of purchase? What is the meaning of purchase? Purchase. Purchase means buying the goods. And when you buy the goods, what is your intention? Intention is to resell. Which means anything and everything that you buy in the business, I will not record in the purchase account. If I buy any product in the business, I'll ask myself a question. Am I going to sell them or am I going to consume them? If I'm going to sell them, then that expenditure you can record in purchase account. But on the other hand, if I'm buying something where I'm not going to sell, I'm going to consume, such as stationery item. I purchased a pen. If I'm selling the pen, if I'm a stationery shopkeeper, selling of the pen, so buying pen becomes my purchase. But as an academy owner, if I'm buying the pen with the intention to use it, then that is not my purchase. It is my other business expenses. Purchases purely means what? Recording the expenses only of that product where the intention is to resell. Which means when I purchased 10,000 worth of chocolates here, you allowed me as a chart accountant, you allowed me to record this 10,000 in the debit side of purchase account because I promised to sell it. But did I sell it? It's 10,000 worth of chocolates. I consumed it. So I broke the promise. Can this purchase be in the purchase account? Can this 10,000 be in the purchase account? No. We have to reverse it because this is not a business expenditure. This is not a business purchase expenditure. So I cannot allow this 10,000 to stay in the purchase account. Do you agree with me? Hence, you reverse the purchases. Why did I explain this? Because so many people might not have studied this in the school. You would have studied that transaction where the money is withdrawn for personal purpose. So that time entries were drawings to cash. Now I said that here goods are withdrawn for personal purpose. Goods are withdrawn for personal purpose. So goods are recorded where? In the purchase account. So that is to be reversed now. So the entry is drawings to purchase. Why this entry is coming properly, I'll discuss when I do the modern rule. Now, from the golden rule point of view, just few minutes ago, purchases what classification recorded? Nominal. So here I'm returning the purchases, same account, what classification? Nominal, you know, or will I change the classification? Once purchase is nominal, always it is nominal. Any account which is coming in trading in P&L account is always nominal. So I am telling purchase is nominal here. What are you saying? Nominal or not? Nominal, no? Wonderful. What is the rule of nominal? Debit all expense losses, credit all income and gain. Credit all income and gain. This 10,000 rupees, what you have credited, is it income to business? I ate the chocolate. Did I pay the money? How on earth this is income? How on earth this is gain for you? Tell me. Tell me. Why did you ask this question in school to teach us? Tell me. So here with this, what did I prove? In every scenario, golden rule is not applicable. Today only trailer. Movie is still baki. Every class literally. Multiple times wherever I get opportunity, I'll tell you where golden rule is a failure. And I've done that in 11, 12 continuously. Every time I've done it. So here you credited purchase. Applying what rule, boss? Tell me. As per golden rule, you have credited, telling this is nominal account, create all income and gain. My question is how this is income, how this is gain. If I pay any money over and above the purchase cost, that is gain. Should I record? No. So here this has come because of modern rule. Modern rule application we'll be discussing next class. Clear with this part? Okay. Let's come back again. Are you clear with what is nominal and real? See, we have to study this why, because you might get a question in the true and false. Cash account is personal account. True or false? False. It is real account. So only for that reason I'm teaching golden rule. Only for that reason I'm tolerating golden rule. Otherwise, enakku golden rule. Now comes personal account. Personal account is further bifurcated into 3 categories. Personal account is further bifurcated into 3 categories, which is natural personal account, artificial personal account, representative personal account. Natural personal account means what? Human being created by God. Example, Ram account, Sham account. So if I buy from an individual person, Ram, or if I pay salary to Sham, if I pay salary to Ram, so Ram is an individual human being. So he will come under what classification? Natural personal account. Natural personal account. Sometime in business you deal with artificial person, such as what? Business entities. All the business entities and the financial institutions are called as artificial person. Law tells that these business entities and financial institutions are called as persons. Law has given them the status of being called as persons. Why person is very important? Because only a person can own a property and sell a property in their own name. So as an enterprise, if I want to buy the asset in my name, that is business name, I cannot buy it unless until I am called a person. So hence law said that, okay, we'll make a business a person. Which person? Artificial person created by law. Artificial person is created by law. So law said that now, Reliance Limited, you are a person. What person? Artificial person. Now because of this rule that the law gave, Reliance Limited can buy the land in their own name, sell the land in their own name. Reliance Limited can sue somebody and Reliance Limited can be sued by somebody. Because when I sue somebody, I need the person's name. So company needs to be called for that as a person. So to ensure that we give a status of a person to that company, we created a law saying that, yes, Business entities, organizations, institutions can be called as a person, but these are not natural person. Natural person is created by God. These are human being created person, so these are artificial person. Reliance Limited, artificial person. Any bank, artificial person. Are you able to differentiate between both? Okay. Then comes representative personal account. What is the meaning of representative personal account? What is the meaning of representative personal account? Anything which is neither anything which is neither nominal, nor real, nor natural personal, nor artificial personal will come under a residual category called as representative personal account. So what is the purpose of this representative personal account? Because these represent a group of items. These represents a group of items. So can you give me one example? Outstanding expenses. Outstanding expenses. In that example is outstanding salary. What is the meaning of outstanding salary? I'll just take one example to make you understand. There is this company, okay? This company has the habit of making the payment salary monthly. Sir, every company pays monthly only, correct? Now, payment can be done monthly in two ways. Some people who are very cash rich, 30 month and 30 or 31st, they'll make the payment. 30 evening or 31 evening, 30 April or 31st May, the money will come to your bank account. Your salary is credited 10,000 rupees. Salary credited 1 lakh rupees, the message will come. Those are cash rich people. They have surplus money in the bank, so they did not wait for collection. But there are some organizations who do not pay the salary on month end, 30-31, because they tell that, sir, we're ready to get money from the customers. Our customer will pay us next month, first, second, third. So we have the habit of making the payment to you on 5th of next month. So there's so many companies in country where the salary to the employee will come on or before 5th. 5th of the next month, they'll make the payment. So now, April month's salary, when will you pay? 5th May. Do you agree with me? May month salary means the person who is working in the month of May, when will he get the salary in his bank account? 5th of June. Like that, if I keep on going, Feb month salary will come when? Feb month salary will come in 5th of March. Do you agree with me? So from here till here, May to March, please calculate how many months? May, June, July, August, September, October, November, December, Jan, Feb, March. How many months? Which means 11 month salary paid. 11 month salary paid. Let's say salary is 10,000 per month. So how much salary recorded? 1,10,000 salary recorded. Please tell me, your accountant will record what entry for payment of salary? Every month he'll record one entry. What entry? Sir, salary account, because it is expenditure account, nominal account, debit all expense and losses. So salary account debit, how much? Monthly record, but for explanation purpose, I'm doing it total. Otherwise, monthly. 1,10,000. And since money is paid to cash, 1,10,000. Which means an accountant will record only those entry for which payment is done, money is received. He will not record any other transaction because he has not studied from. Technically, he has recorded 11 months salary. Do you agree with me? Here, salary account is debited, no. So salary is debited for how many months? 11 months. But the benefit that you got from the employees for how many months? Your employees work every month from April till March. If I have to see from the service point of view, the employee of your company has given you the service from April till March. So April, May, June, July, August, September, October, November, December, Jan, Feb, March. 12 months your employees work. From 1 to 30, 1 to 31, 1 to 30, 1 to 31. All 12 months she's worked. So you got the benefit for how many months? 12 months. You paid the money for how many months? 11 months. Your accountant recorded the entry for how many months? 11 months. Right or wrong? Who said right? Somebody said right. Who was it? Why it is right? How come it is right? You have violated one principle. Matching principle. Matching principle says that if you are getting benefit for 12 months, you have to record the expenditure for 12 months. Record the expenditure, record that much quantum of expenditure as much it is contributed to your revenue. So I have got 12 months benefit. So that benefit is helping me to earn my more income. Because if the staff is working for all 12 months, I'll be able to do more business, more sales. Correct? No? Directly or indirectly. If the staff is helping me in my business, it is growing my business. It is adding to my turnover. So when you're getting benefit from that person for 12 months, how is it fair to record the expenditure only for 11 months? So March month expenditure also should be recorded. No. Here, what did you do? April month salary paid in May. So May you recorded. May you recorded entry for which month? April month. April month salary paid in May. So this is the expenditure for which month? April month. May month salary you paid in June. So this salary what you paid in June is expense for which month? May month. Likewise, Feb month salary you paid in March. So 5th March, the expenditure what I paid is for which month? Feb month. March month salary, when will I pay? Next financial year, April 5. April 5th, which I am paying money, is expenditure for which month? March month. Where is March month entry? Boss, you recorded April to February month salary. 11 month salary you recorded. Where is March month salary? March month, did the employer not work for you? Yes, the employer had worked for you in the month of March. Where is that entry? That is the entry that you have to record in form of adjusting entry. So that is called as adjusting entry, which you have to record. Am I loud and clear? So that is called as outstanding salary. Outstanding salary means what? Expenditure incurred, money not paid. Expenditure incurred means what? When do I incur my expenditure? When I take the service from that person, I am under obligation to pay the money. If I go to a departmental store, if I take a chocolate, tear the wrapper, I didn't eat it, I just tore the wrapper, am I having the obligation to pay? Yes, because I broke the wrapper. So though I did not eat it, since I broke the wrapper, I have the obligation to pay. But here, the employees work for the entire 30 days. Can you tell him that I'll not pay salary? You can't say. So there is an obligation that you have to pay money. So outstanding salary means what? Expense incurred. Why is expense incurred? Because benefit is already received by you. Benefit is already derived by you. You've enjoyed the services. So you are under obligation to pay. So expenses incurred. Expense incurred means what? Benefit is consumed by you. When do I say my expense is incurred? The benefit is consumed by me. Expense incurred. Did you pay? I did not pay. So expense incurred, but money not paid. That is called as outstanding expenses. Outstanding means what? I'm yet to pay the expenses. Outstanding means what? Pending. Outstanding means what? Yet to pay the expenses. What entry for that? Salary 11 month recorded. 1 month I did not record. To record that further salary debit. Salary account debit 10,000 to outstanding salary. Outstanding salary 10,000. So this is my expenditure, whereas this is my liability because I have to make this payment next month. Always your accountant will record that entry only for which he has paid the money and received the money. He will not record any due entries because he does not know that. Like that we assume. While learning, we assume like that. So this is called as salary to outstanding salary entry. Now, salary is your, as per golden rule, expenses. All expenses come under nominal account. Outstanding salary under what classification? Personal, agreed. Because outstanding salary is neither expenses, so it will not come in nominal, nor gain, nominal nahi aayega. Then real also not come because outstanding salary is not asset, it is liability. So what is personal? All liabilities are personal. But the question is it natural personal account? Is it artificial? Is it representative? Why, boss? You are giving salary to human being. No. Why can't you call this as natural personal account? Valid question. Salary outstanding to whom? Human being. No. So why can't you call this as natural personal account? Why representative? Please tell me. Yes. Now here, 10,000 I record for one employee. Like that, in the company like Reliance Limited, in the month of March, how many employees will be working? Boss, 1,000 employee. To each of them, 10,000 salary means what is amount? It'll go in crores. Please tell me, when I record the entry, I record, are you expecting me to record 1,000 different entries? For Ram one entry, for Sham one entry, for Gansham one entry. No, boss. 1,000 employees multiplied by their salary. The total amount, 10 crore if it is coming, let's suppose, or 1 crore if it is coming. I record the entire amount in one single journal entry. So here, this 1 crore rupees, what I'm recording here, no. Here, the 1 crore rupees, what I'm recording in the outstanding salary account is representing a group of people. It's representing a group of people. That's why the name given to them is representative personal account. So this outstanding salary is representing 1,000 people. Hence, it is representative personal account. Any problem? Same way, prepaid, accrued, income received, advance. One more representation is there: bills receivable, bills payable. Bills receivable is representing a group of debtors who has signed a document called as bills of exchange. So when I do bill of exchange chapter with you, that time you'll understand the significance of bills receivable. Bills receivable is nothing but I sold the goods on credit. I sold the goods on credit. That person is called as debtor. This is business. Sold the goods on credit to customer. So this customer will be called as debtor. Now in return, I'm not taking anything in writing from the debtor. So this debtor is unsecured for me. Do you agree with me? Chances are there that this person will not pay the money. And recovering this money from the court is a tedious process because I don't have any evidence. Strong evidence is not there. Evidence is there. Bill is there. Strong evidence is not there. Now, on the other hand, this debtor is signing a document and giving to me called as bill of exchange. Whereas in that, he's signing a document. The document says that on so and so date, on so and so time, I will come and make you the payment. If I don't make the payment, I'll be responsible for it. Like that, he's writing and signing and giving. Now tell me, people, when this customer is giving a document and signing about the promise to pay, can I say the same debtor has now become secured? Because even if he does not make the payment, I can drag him to the court, recover the money fastly because I have everything in writing. He is very clearly written. If I don't make the payment, I'll be responsible, which means court will immediately rule out the decision in my favor. If the writing is not there, document in writing is not there, proving that this person has purchased, he has to pay the money becomes a tedious process. But when he has got something in writing, no, my job becomes easy to recover. So in that case, this debtor becomes secure debtor. So who is a secure debtor? A debtor who gives a letter in writing, not love letter, promise in writing that I will make you the payment on so and so date. That becomes a secure debtor. And the person who does not give anything in writing is called as unsecured debtor. Secure debtor, technically in our books of accounts, we call it as bills receivable. Bills receivable. So like that, how many customers will give me in writing? So all of them put together are called as bills receivable. Hence, bills receivable is a representative personal account. Bills payable is representative personal account. So all the liabilities are your personal account, including bank. Bank is artificial personal account. Bank is a person created by law. Law says bank, you're an artificial person. Debtor could be either natural or artificial. If I'm selling the goods to Ram, let's suppose you guys are there. Let's suppose you go to one buy kade. You know buy kade? Every street has got one buy kade. All of you know, no? Petty shop. In that petty shop, you say, Anna, daily you see me, no? Daily I see you, no? I love you. So give me one 10 rupee chocolate. I'll give you money tomorrow. With that one, I love you, took the chocolate and went. Which means that buy kade, the petty shop owner has sold the goods to you on credit. To him, you are debtor. Are you a natural person or artificial person? Natural person. So debtor could be natural or debtor could be artificial. The same, let's suppose the purchase you have done from a big shop under the banner name of Kalpavriksha Academy. So let's suppose I'm buying from Reliance Limited. One item. For Reliance Limited, I am a debtor because he has sold the goods to me on credit. So I am his customer. Am I a natural person? No. Kalpavriksha Academy is artificial person created by law. So debtor could be either natural or artificial. So is bills receivable, prepaid and accrued. All these are asset, but it does not fit under real account. It comes under personal account. Any problem? So personal account has got how much classification? 3 classification: natural, artificial and representative personal account. Are you able to understand the logic why we have something called as representative personal account? How many of you felt that this logic is understood only today? Others, you knew that logic before itself? Representative means is representing group of people. 11th you learned it. Wonderful. Now, how many of you felt that you learned something new today? Something new today. Good. Nice. So like that, every class new means how much is that to learn? Imagine, because we're going to learn for next 6.5, 7 months. Every class like this, new information. How many things to learn? So are we having that excitement to learn? Doesn't look like. Should come instantly, like how it came for Gautam. So tomorrow when we meet, not tomorrow, day after tomorrow when we meet, so I'll do a couple of questions based on golden rule from your ICA module, and then we'll again discuss modern rule, and then question based on modern rule. Then we'll start journal. To start journal, we can't spend too much time on journal ledger. So if anybody who feels that you don't have a strong base in journal, ledger, or whatever topics, 11th CBC videos are available. You can get in touch with Anita ma'am and get the recordings and watch it, because all the topics that is dealt with in 11th and 12th, repeating them in the same depth is not possible, because we have a span of 6 months to complete the syllabus. So if you see in 11th CBC, whatever I discussed about for nearly about 6 classes, I summarized in 1 class today. So like that, whatever we are discussing in 4-5 classes in 11th and 12th standard, here it is going to be summarized in 1 class. Clear? So now, before coming for next class, what will you do? Whatever I've discussed, you will revise and come, because I'll ask oral question based on that. Plus, those who have already studied modern rule, you'll revise that and come. And those who have studied journal, ledger, almost everybody has done that. So you'll revise that from your respective textbooks and come. When? Before coming for next class. Am I clear? In my class, the rule is very simple. Whatever learning you're doing, whatever classes you're watching, within 12 hours, within how many hours? 12 hours, max to max, 24 hours. You have to do one study. There's something called as watching class or doing class. But there's something called as study. There's something called as revision. There's something called as recollection. All are different. Classes means what? You are learning that subject for the very first time from that particular person. Class. In the class, never your concentration is 100%. Your concentration will be like ECG machine. Up, down, up, down, up, down, up, down. It's okay. But 90-80% also if you capture in the class, no? Go back home, the same thing. Take the book and properly study. If 3 hours I take class, means take proper 2 to 3 hours to properly study each and every item. Load in your mind. That is called as first study. This should be done within 12 to 24 hours. 12 hours is best. 24 hours slightly tricky. Within 12 hours, you have to sit and do the revision. Even though you know it, still do the revision. First study. Within 48 hours to 72 hours, that is within 2 to 3 days of first revision. First study. You're supposed to do first revision. So today is what? 16th April. 16th April you did class within 24 hours or 12 hours. 17th April, when? Morning hour is the best hour. Anywhere between 4 o'clock to 8 o'clock. Anywhere in between that. 5 o'clock, 6 o'clock, 7 o'clock also you can do. Anywhere in the morning session, you have to do first study. Means after class, you are giving your 100% concentration and you're learning the topic for the very first time. Within 12 to 24 hours. Then, from the first study period, calculate 48 hours, which is 2 days or 3 days, depending on the difficulty level. So either not 18th, 19th or 20th. Either 19 or 20 April. You will do preferably morning. Preferably morning. First revision. What is the meaning of revision? Whatever you've studied, no, you'll take the book and keep in hand. You'll try to recollect it. If you're able to recollect, well and good. But there are chances that few things you might not be able to recollect. So again, you'll sit and study. So study is nothing but a combination of recollection. Revision is nothing but a combination of study and recollection. Revision is nothing but little bit of recollection without seeing book and little bit of study by seeing book is revision. So study means what? Fully looking at the book and putting the data in mind. Revision means what? You recollect, and wherever you're not able to recollect, you again study. That is called as revision. Recollection means what? You don't need to see the book. You just keep the book in hand, keep on recalling, the data will be coming. automatically. That is called recollection. So first revision should be done within 48 hours to 72 hours of first study. Do you agree with me? Then from first revision, you're supposed to do second revision. When 1 week of time, within 1 week. So 19 के बाद 20, 21, 22, 23, 24, 25, 26. 26th or 27th of April, preferably again morning. What are you supposed to do? Do second revision, which is a gap of 1 week. 1 week of first revision. When the first revision is over, no, from there, give a gap of 1 week. And you have to do second revision. Means what? Try to recollect. If you're not able to recollect, sit and revise. From there, give a gap of 15 days. That is 2 weeks or 30 days, means 1 month. And you have to do third revision. So revise 15 or 30. Some topics are very easy. So you can revise after 30 days. Some topic a little bit tricky, especially subject like law. You have to do third revision within 15 days. Or else you are not screwed. You are royally going to get screwed. So which means 1 month later means 26th or 27th of May. Or in between 15 days means how much? 12 or 13th of May. Somewhere in between, you have to do third revision. So third revision should be within 15 days or 30 days of second revision. You have to do it. No other choice. This is a revision technique that we asked to follow. This is in general revision technique. If this works out for you, well and good. By chance, sir, even after this, I'm not able to recollect points. I'm forgetting things. I'm not able to get a proper flow of writing. Come back and tell me. I'll understand what is your problem. Accordingly, I'll give you a solution. Understanding your nature, how is your grasping ability, how is your application of mind. Considering that, I'll give you a more robust revision technique. This can be keeping on customized. I told you in the intro video, revision technique differs from person to person and subject to subject. For law, this revision technique may not be sufficient. You have to follow a more robust revision technique. So that I'll tell in the upcoming sessions. So as a founder of the academy, my role does not restrict only to teaching accounts. I also need to take care of the other subjects, how the revision needs to be done, how the test needs to be done, how the counseling needs to be done. So for law, maths, economics, on the go will tell how things needs to be taken care of. Am I clear? And somewhere after first revision or the second revision, your test will happen in the academy. Am I loud and clear? Then and there, whatever homeworks I'm giving, you have to finish. Initially, April month, I'll be very light on you. Once we touch May, things will load up. Once you come to June, it will be super duper load up. Are you clear? So get used to it. Gradually start increasing. Now, if you're studying for, let's say, 2-3 hours only, make it to 6-7 hours. From that, gradually make it to 10 hours. From there, you have to touch up to 12 hours. 12 hours, if you study effectively 10 hours, you will be able to register data in your mind. So on an average, if you want to clear CA with a good score, 10 hours per day you have to revise, study. Classes, revision, test, everything put together, 10 effective hours. I'm not telling 10 hours, everything put together. I'm telling 10 effective hours. So 12 hours if you sit with the book, your small breaks, here and there, your thought process, deviation, daydreaming, all minus 10 hours will come in your pocket. So 10 effective hours I want. Only then I can help you get 250, 280, 300, 320, 330, 350. The goal is clear. Roadmap is clear. Okay. Any other doubts? Any other doubts? How is the session today? Comfortable? Is this speed okay? You want me to go more slow or more fast? Or this speed is fine? This is good enough? Okay. Online people, this speed is good enough?
Yes, sir.
Yes,
Or
sir.
you want to keep the speed? AC is like, sir, your speed is fine, sir. AC is very chilling, cooling. For that, I already gave a solution. What is the solution? Either wear a sweater and come or jacket and come. Choice is yours. Loud and clear? Any other doubts? That's all. So yes, people, let's wind up. That's all from my side for this session. I'll see you all on Friday, 10:30 a.m. sharp. Until then, bye-bye. See you. Take care. Thank you, people.
Thank you, sir.
Thank you, sir.
Thank you. Thank you. Bye.